Good morning, everybody. Greetings and salutations. People should be flooding in the room any second now. I always come in a minute early. I'm not sure why. People like to show up right on the dots. How you doing, Micah? I'm good to see you. Luciano, nice to see you. Gary, good morning, good morning. True story this morning, guys. I woke up and I thought to myself, I'm just going to scroll back. You ever do that? You ever walk away from a day and you're like, man, I just want to go see what I saw, what I didn't see, what happened, what didn't happen. And I want to do it with a calm eye, without the adrenaline of needing to perform. I did that this morning a little bit, just scrolling back on the S&P. Um, I posted the pictures, guys. It was a few 50-50 trades in there. It was a potential trend trade in there. And I just used a simple little checklist that helped me know when I had the advantages and when I didn't. And it came from a discussion from this morning, from yesterday, and really from every day for the last 2 years with clients. Is everybody tells me they're good, they understand the rules, they have a checklist, they wrote a plan, but we all seem to have a few challenges following them, guys, and I'm no exception to the rule. I don't want you to think that I'm throwing stones over here. So we're going to talk a little bit more about trust, because trust seems to be the key word, right? Trusting your checklist so much that that you never waver, that you're committed to that plan that brings you success. So we're going to do a lot of that today. I'm going to slow tiptoe into the day because I'm looking at the names, and all you guys are the usual suspects, which I appreciate very much. I love that you guys come back day in and day out, that you share your pictures, that you ask your questions. Yesterday, we had some of the best questions in a long time, and I think that there were some great, just some absolutely incredible discussions about tops and bottoms, about 50-50 trades, guys. So let's keep that momentum going, and let's really focus on the best of the best today, and you guys asking questions. As usual, every morning I go to forexfactory.com when I'm loading up charts. My brain is finally letting me sleep past 4 a.m., so I make it all the way to 4:30 now. So I come in and check my news. Today is Thursday, June 14th, guys. When I'm looking for news, I'm not worried about core retail sales or the Empire State Manufacturing Index. These mean nothing to me. What I am looking for, did I say the wrong date, David S? Sorry. Guys, look at your calendars. Apparently I'm no good with the calendar. I'm looking right at it too. Thursday, June 14th, 15th. I almost did it again. Good morning, everybody. It's this day right here. Thank you, David. All that news and nothing, right? Yeah, I may need a third cup. Guys, I'm not worried about what it says. What I'm really looking for is I want to know that it's going to be there, because it has the potential to move the market. It has the potential to make it jump and bounce, and it may not, right? Poor Ron's been deflated 2 days in a row that news hasn't done a darn thing for him. But sometimes it does. I've watched the market move 50 points in 10, 15 seconds off of a news release. So knowing that it's happening, knowing that these high impact, that these medium impacts are coming, and that's what it is. It might have. Sunday school answer. It might have. So, but isn't that kind of what we do, guys? Let's think about it. Aren't we trading the potential? Because nobody can predict the future here. If you could, you wouldn't be here, right? You'd be on your island in the tropics, probably growing coconuts or something. Nobody can predict the future. So what we do is we work in statistical advantages. We work in scenarios that have been proven to win more than they lose. We work in rules that are designed to get us into the market, rules that are designed to get us out of the market. And news is no different. With the potential for an untradable market because of the volatility, we can make a good decision to avoid that moment in time, right? To not put ourselves in that position. This is no different then recognizing a termination condition and making the choice not to trade into a termination condition. It's no different than not having odds favorable momentum and making a choice to not take that trade without the momentum that we need. So, guys, every morning there's the potential for news. At 9:15, we have a medium impact. It's the industrial production. They're making M&Ms today, and that might make the news bounce. It might make it spike. The market may become untradeable for a moment. So that awareness gives us a little advantage, right? A statistical advantage. If I don't trade when the volatility can go crazy, then I can't be taken out of the perfect trade because I'm not in it. So that's kind of what I do every day, guys, and that's it. It's potential. It really is, trading that potential. After I go to the news, I always click on the Next Gen education page, guys. There's a couple things on here. There's the indicator tutorials, everything that you need. Man, you and me both, Paul. I'm waiting on that almanac. I want to go back and buy a little Apple stock too. T3 Fibs Pro Trader, indicator tutorials, guys. Everything that I talk about in this classroom comes from this section. There are no secrets with Next Gen. We are not in the business of giving you a little bit and then hoping that you get it. I'm going to give you everything that you need today. And I mean literally everything that you need to be successful. It's going to be up to you to accept it, to learn it, to practice it, and commit to it. But I'm going to go to the user guide first, guys. The user guide is your NinjaTrader how-to. We've got a lot of new people in the room, people coming in. It's great to have you here. If you are new, raise your hand. Let me know. Vin, it's good to see you back in here. Guys, your software user guide is going to be all of your kind of NinjaTrader how-to. It's going to talk about setting up stops and targets. It's going to talk about scaling charts, right? Even taking pictures. So I want to go through the chart scaling first, guys. It's kind of a big deal, making sure that if you open up your workspace, and this is the NASDAQ, it moves a lot, so I thought it'd be fun to open. If I open up a workspace and I don't see anything, I don't see these bars moving, I don't see that black highlighted price, it doesn't mean that your software is broken, that it stopped working. It just means that it's someplace else. And guys, this holds true whether it's NinjaTrader 8 or NinjaTrader 7. In the upper right-hand corner, there is a white arrow, typically, if the chart is out of sorts, and there's a capital F. If I click the capital F, it's going to bring my bars back. It's going to make it, when that F is not present, you will never lose a bar. You'll see the up, the down, everything, and it'll never go off screen. But you'll notice that this one looks like it's at 49.1425. This one looks like it's at 47.50. They don't line up. So right now, the market's trading off screen, and that's where this white arrow comes in. If I click this white arrow, now suddenly my charts match. If you're like me and you have a little bit of OCD, and you like things to be centered when you're looking at them, you can hold down your control button, left click on that vertical axis. I can pull the chart down. But if I go grab a glass of water, cup of coffee, toast a bagel, I come back, this market may not be there anymore. And if that's the case, I have to click that F. You might also accidentally bump it, right? Click the arrow. Holding down your control button, whether it's the horizontal axis or the vertical axis, is going to move the entire chart together. If I don't hold down that control button, I can tighten my bars, I can stretch the bars out. Guys, the idea is that it's readable to you. If I stretch them way out and I'm like, oh, that's way too much, click the F, they come right back. On the horizontal axis, I can tighten it way up and go, oops, there's no way I can read that. So I'm gonna pull it back out, right? And I'm gonna get it to where I can see where I've been, I can see where I'm potentially going. I want to get enough information to make good decisions, to be able to read my indicators. Guys, scaling is easy. It's not a difficult thing to do. The other thing that you're going to do with NinjaTrader, and this is for you newer people, hopefully you're in here looking, is we are going to use limit orders to enter the market. And that's just how we do it, because you're going to be able to pinpoint where the market's likely to continue. To activate a limit order on NinjaTrader, all you have to do is right click. If it's above the current price, your option is a sell limit. And a sell limit means that if the market comes up and hits this order, your anticipation is that the market's going to continue down in a downtrend. Of course, in an uptrend, you don't want to hit a sell order. The opposite is true. If I right click before price, buy limit 1, if the market comes down and smacks into this limit order, my anticipation is that it's going to continue up. I'm in a position long. And guys, those are kind of your NinjaTrader basics. Super easy. The next thing that you're really going to need to be able to do is take a picture. Everything in this classroom revolves around taking pictures. You and I having a conversation, guys. Not just taking the picture, but talking about what you see on that picture. And making sure that you're telling me why you did what you did. And this capture software was downloaded on your computer when you got the software. And you click this big red button that says capture. If you hover over one chart, it gives you one chart. If you left click in the upper left hand corner and drag it all the way down to the right, guys, we're going to capture everything on that screen. And this is so important for getting good feedback. When I release, it's going to give me the option to click a camera that says capture an image. It walks you right through the process. And once I click that camera, up comes my image preview, guys. I can see my large chart, my small chart, and I can use all the tools available here. Shapes, I can highlight if I need to, arrows, but the most important thing that you're going to use is this call out button. Guys, on this call out button, I need you to write why you got in the market. If you don't have rules yet, tell me what you saw. Hey Mark, I was looking at the market and everything was green and I thought that I should jump in right here. And then we'll talk about it. We'll talk about what you did well, what we could do better, how I can help you do it better, right? One of the things that I think is very important is tell me how you felt. Hey, Bobby. Were you nervous? Were you calm? And one thing that you'll notice in this room is that when people follow the rules, when they take the trades, you'll see me ask them, hey, how did you feel getting into that trade? And the answer is typically, I felt calm. I was relaxed. I was confident. I knew the advantages that I had. Guys, if you're taking trades and your palms are sweating, you might be breaking rules, right? And I think that annotation is so important. We had a little conversation about it here. Be truthful. If there's something in the way, it doesn't mean that you can't take the trade, but identify it. Let it be there because you're going to come back and study these pictures over and over. You're going to come back and look at the pictures that you take so that you can be a little bit better trader, guys. Get in there, annotate the charts. Let's have a conversation. Pretend like you're talking to me. Hey, Mark, this is what got me in the market. This is what I saw. Here's an arrow pointing to it. I was a little nervous getting in because I wasn't sure about this. How was my read? Once you do all that, you click upload. Guys, can you hear me? Give me a Y if you can hear me, please. Cool. I woke up this morning, thank you, Ron, and I said, how do I keep Jeremy from hearing me? And I pulled it off. Just telling you guys, you put your mind to it. Put your mind to it, you can make it happen. So we'll get Jeremy to reboot so he can come back in and hear me. If that ever happens, guys, all right. If that ever happens, you're like, man, I can't hear a word. Say something in the room instantly because there have been times where I have been muted and I've given the cure for cancer, right? And nobody heard it and I forgot what I said because I'm a little bit old when I'm done. Guys, once you have all this information, click upload. Upload is amazing because what it does is it takes that picture and it puts it into the cloud, the screencast cloud. And I want to show you something cool. Every time you upload a picture, it goes to screencast, which means that you can go back and you can study that picture. You can go to screencast and it'll allow you to share that picture if you want to. So screencast is a pretty magical place, and what it does is it allows you to not only share the picture in class by clicking copy, coming over to the chat box and dropping it in. But it also allows you to go back and study it, to get it later, to re-annotate on the chart if you need to. And then the final skill that I really want you guys to be comfortable with, and I want you to embrace this, is NextGen provided you a spreadsheet, guys. It's a trade journal. It's 2 pages. The first page is where you're going to put everything that you do. Every time you take a trade, let's say hypothetically that picture I took was a trade that I took. I can paste it right into the spreadsheet, and there's drop-down boxes all the way across. What did you take? How did you feel? What were your conditions, guys? It references the rules. And then the most important thing that you can do is you can say what happened, right? You can come back when you're calm, trade it into a termination condition, lost the trade, right? And then I look, if I go back and I study, trade it into a termination, lost, broke all the rules, lost. Rule 3 broken, could have been a small winner, but it was break even, never missed this setup. Guys, I'm going to go back and I'm going to study this every day. When my rules are met, I'm going to take that picture and I'm going to drop it into the second page. This is my personal trade setups. This is me building a plan. This is me creating trust in the rules that I'm trading, proving to myself through multiple pictures that they do in fact work more than they don't, that it does provide me a statistical advantage. Your entries are going to be your first goal as a brand new user. You're going to spend 30 days, 20 trading days, guys. It's a small slice of your life, and we're going to teach you how to get into the market where it's most likely to continue. When your rules are met, take a picture. As you work on management, there's opportunities for you to fill that in. Everything that we do revolves around chart reading, guys. You're going to begin to recognize patterns that are advantageous. You're going to recognize patterns that aren't. You'll be able to put these in here. There's a whole section dedicated to termination conditions. It's the Mark Novak section because I loved trading in termination conditions when I started. But guys, all of this being said, taking pictures, using the spreadsheet to get you on the path to success, to being a confident trader ASAP. This has been in play for as long as I can remember with NextGen. NextGen's been around for 25 years. We've been teaching people to trade the markets, to read indicators, guys, and the step-by-step path to getting to where you said you wanted to be. Post your trades in class. Every trade, win, lose, or draw. My job is to tell you what you did right, what you did wrong, and to give you a plan of attack to be able to do it right more often than wrong. If you are not posting in class, guys, you're giving up a huge advantage. I'm going to show my age here, but I want you to think back to it. Tiger Woods had a swing coach. Tiger Woods was the best in the world. Michael Jackson probably had a vocal coach. Michael Jordan had a free throw coach, had a slam dunk coach, right? Had a defense coach, had an offense coach. He was the greatest basketball player in the world back then. Wayne Gretzky had a coach. Serena Williams has a coach, guys. Some of the greatest minds in the world had mentors. And the reality is it's that objective, it's that I'm looking from the outside in. I don't have an emotional attachment to your trading. So when you post something in the room, I don't have the same adrenaline rush that you have. I can look at a still picture. I can analyze it. I can provide you feedback, and I can help you get in a position to do it better every time. So don't forfeit that advantage, guys. Don't forfeit that advantage of having someone live 15 hours every week helping you on your path. The second thing is use that spreadsheet, guys. Take pictures. Take as many pictures as you can. If you commit to 15 pictures a day, that's 75 pictures a week, guys. That's 300 pictures in your first 30 days. You're creating this recognition through repetition, right? Take as many pictures as you can. You don't have to post every one of them. I'm okay if you do. But take pictures before you get into a trade. Are your rules met? Take a picture when you're in a trade. It might help with management. Take a picture after the trade. Let's see what happened after the trade. And don't skip pictures on the losers. I used to do that. Not proud of it, but I used to do that. If I lost a trade, I didn't take a picture because I didn't want to remember it. So I never gave myself that lesson, guys. Take a picture of everything you do and get it in the spreadsheet. This is your job as a new trader, right? This is what's going to get you where you want to be. My job is to teach you the trigger line and Fibonacci rules for when it's okay to trade. I'm going to do that in the first hour. I spend the first hour every day talking about a high probability trend trade, talking about a trade where every indicator on every chart agrees for the trade. Then we're going to come back in the second hour and look at that. What if there wasn't a perfect entry, right? And guys, this is what we're going to do, is we're going to take your pictures, then write it on the chart. Mark, where's the perfect entry? Because what we're ultimately going to be able to do then is we're going to be able to take your question, and you're going to love this. I'm going to turn it around on you. I'm going to say, Vin, where were the rules met? Where did you have odds favorable momentum? Where did you have a lack of termination conditions? And where was the pullback to support inside of favorable large triggers? Guys, I'm even going to give you a checklist that you can go through every trade. So then your answer, per the checklist, is your rules-based entry was right here. Your rules-based entry was right here. And that market went all the way up to Fibonacci resistance. How cool is that? I'm going to give you this checklist, guys. I'm going to teach you these rules. This is a high probability trend trade. This is a trade that wins more than it loses. So then there's your answer. Is that what you got? But my goal for you guys is to get to the point to where you don't say, hey, Mark, was there a trade? You say, hey, Mark, here's my rules. This is where I saw a trade, right? So then you get a couple free passes being brand new. But my expectation for you and for everybody in this room is that when you present a picture, stop asking me if it's a trade. Tell me where your conditions are met, because what this does is this reinforces your ability to understand the rules. It reinforces your odds favorable momentum, your no termination, and where that perfect entry is, guys. This is your path to success, doing the work. Because I'm not going to hold your hand during the trading day and tell you where the trades are. I don't call trades. I don't tell you when to get in, when to get out. I don't even tell you what your plan is. You have to do that. But I'm going to give you a lot of resources to make sure that you have everything you need to build a plan that wins more than it loses. So we're going to learn the rules together as a class, guys. We're going to talk about them. We're going to look at them visually. You're going to simulate your trades daily. You're going to practice getting in and out of the market when the rules are met. And here's the reality, is you're going to get in and out of the market when the rules aren't met, but you need to post that picture so that we can talk about those rules. Simplicity. This says simplify your trades into plan to 2 trades. We're going to talk about one trade initially, guys. We're going to talk about the high probability trend trade, the absolute best of the best, when every indicator on every chart agrees for the rules for the trade, guys. You're going to have the strongest triggers. You're going to have absolutely nothing in the way between you and your targets. You're going to have 3 simple advantages that provide one trade that has been proven to win more than it loses. But what this trade is going to do for you, the big reveal. Whoops, I'm not on the tutorial section. Let's go to the tutorial section. What studying this high probability trend trade is going to do for you is it's going to teach you how to read your charts, guys. You're going to be able to open up these workspaces, look at your charts. Oh, there may have been a high probability trend trade. Dan R., good morning. Good test. Welcome to the room. Guys, you're going to be able to open up your indicators, open up your charts, look at your workspaces, and you're going to understand fluently where the market is likely to continue. You'll be able to use that continuation point for an entry for this highest probability trend trade. You'll understand where the market is likely to go. You're going to use Fibonacci and momentum indicators to determine where that market is most likely to go, and ultimately you'll use it for profit targets. And then you're going to understand where the market is likely to stop. And where the market is likely to stop not only takes away the advantage of trend trading because the trend may end, but that area where the market is likely to stop, what we call a termination condition, is going to be the precursor for the most highest probability trade you can take, the one that happens after a termination condition. And if you commit to your first 30 days, keeping it simple, looking for the absolute best of the best, you're going to build confidence, and more importantly, you're going to build trust. So what we're going to do is we're going to talk about this trade. We're going to talk about recognition. We're going to talk about the rules. We're going to look at them visually. And you're going to have the ability to go back and practice them again, maybe this evening on Market Replay, and just practice your rules over and over, making sure you always have the correct trades, asking for feedback. And you're going to repeat this process every day until you always take the correct trades, right? Because if you're always taking the correct trades, if you're focused on execution, you're taking a trade that provides a statistical advantage. You're taking a trade that typically wins more than it loses. You're putting yourself in the catbird seat, really. You're giving yourself that best chance of success. So this is what we're going to talk about this morning. I encourage you guys, raise your hand if you have any questions. Interrupt me. You really can't interrupt me, guys. This is my class. I don't have a syllabus. We'll take as long as we need to talking about any of the concepts that you need to talk about. But what we're going to do this morning is we're going to talk about 3 simple rules. 3 rules for the high probability trend trade, guys. These 3 rules provide 3 advantages. The advantages are in yellow, and these 3 advantages, when you put them together, are the recipe for a high probability trend trade, guys. The second you forfeit an advantage, you make a conscious choice to not have one of these, it's no longer a high probability trend trade. That 70 to 80% goes out the window. Doesn't mean that there aren't great trades out there that give up an advantage, but as a brand new user, focus on the best of the best. Master the easy one before the additions. These 3 rules happen on only 2 charts. We had one day where everybody kept posting multiple charts, and I kept breaking it down to 2 charts, and the rules were still met or not met on the 2 charts, and all those other charts were just noise. As a brand new user, you don't need all that noise. Focus on the best, right? Keep it simple. Your large chart is really what the large crowd is doing, and we're going to define areas and direction. And this is your deep pockets investors making that market do what the market does. And then your small chart's going to be a refinement tool. And this is where the yahoos fight the overall trend, where they fight the overall momentum. But these guys are going to get us to our entries. So we're going to use that large chart. We're going to define direction. Which way is the market trending? We're going to define the momentum. And we're going to define the areas that we need to be aware of. The same areas that those deep pockets investors, that those institutional traders are recognizing and reacting to. Your large chart is a broad stroke of a brush, guys. It's the overall temperature of what the market is doing. It's that overall opinion. You're going to have 2 of 3 rules that absolutely positively have to be true, on that first chart before you ever turn your attention to the smaller chart, before you ever look over here. But when they are true and you look at the smaller chart, you're going to refine that broad stroke of the brush. Guys, what happens in 1 bar on your large chart is going to happen in about 15 to 30 bars on a smaller, faster chart. I'm going to show you a picture of that. I like to circle 1 bar on a large chart. You can see all of the movement, the fluctuation on a smaller, faster chart. It's the exact same market, the exact same prices. But by using that smaller chart, we are going to pinpoint with amazing accuracy the point where the market is likely to continue. That's our rule number 3. So the third rule happens on the small chart. You're going to be able to reduce your risk. You're going to be able to increase your profit potential. And you're going to let that large chart lead the way. That large chart is going to give you those advantages that have you looking for an entry, guys. So let's talk about those advantages. And let's go ahead and get things going. We're going to use the T3 trigger lines to do a couple different things. The first thing they're going to do is they're going to establish the trend. The small triggers are your solid lines. The large triggers are your slower lines, the bigger lines, the dashed lines. These 2 work together, guys, and the first thing they do is they establish the trend. When the smalls break above the large triggers, we're in an uptrend. Pretty simple, color-coded, easy to recognize. The first advantage that you're going to give yourself is if we're in an uptrend, you should only be looking for rules to be met for high probability trend trades long, guys. Give yourself the advantage of trading with the trend. If the background is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. So simple. Even a caveman can do it. I miss the Geico commercials. Once you've established trend, rule number 1 says that we must have strong trigger lines. And strong trigger lines, once again, are easy to recognize. Strong trigger lines in an uptrend mean that the small triggers, the faster moving average, are above the large triggers. Both triggers are wide. They should be angled in the direction of the trend. They should be strong, coming up like a shark about to breach. And it's the space created between the small and the large that lets me know that the odds are favorable for the market to continue in the direction of the trend. You're going to hear odds favorable momentum in the classroom all day long. You're even going to annotate your charts, OFM, when you're identifying this odds favorable momentum. In a downtrend, it's the same look going the other way with a red background. Small trigger lines are below the large trigger lines. The space between the two lets me know that the odds are favorable for the market to continue down. Guys, this is your first advantage. This is the one that lets you know that market is likely to push in the direction of the trend, right? This is the advantage of momentum through strong trigger lines. If you commit to having momentum every time you take a trade, it's huge. You're going to see a huge difference in your trading. When those small triggers work their way inside of the large triggers, guys, that's a weakening of the large triggers. Weak large triggers tell me anything can happen up or down. The market may go up, the market may go down, the market may reverse. The reality is I have absolutely no idea, but I don't have that advantage of momentum, guys. These weak trigger lines happen a lot before the market reverses. These weak trigger lines happen a lot before the market retraces more than we want it to. When they're wide, when they're strong, guys, this is the most favorable look for buying a pullback. That rule number 3 on a small chart. And remember that one bar? This tail or this wick on your large chart is that pullback on the smaller, faster chart. And you'll notice that when you have odds favorable momentum, you're going to see these wicks, guys. This is a potential entry. This is going to be your study tool. Because if you go back and you open up your large chart, no matter which chart it is, and I'll put just trigger lines on it so there's no noise, what you're going to notice is the tail end of odds favorable momentum. There's a tail, and the market continues, right? Odds favorable momentum, there's a tail, the market continues. There's a couple more right there. You're going to be able to scroll back, and you're going to be able to study when you have this best of the best look, and you're going to be able to recognize this advantage. And ultimately, you're going to be able to take these trades. You're going to be able to see them in an instant, using that odds favorable momentum, and that's going to set the pace for you to start looking for that next advantage, that advantage of a clear path. Guys, is everybody comfortable with that simple look on odds favorable momentum? I'm going to bring up a picture that shows the advantages here. I use pictures a lot in this classroom. If you're brand new, I encourage you to steal every picture that I give you, put it in your chart reading, put it in your spreadsheet, save it to your computer, whatever you do. This is rule number 1. This is your synopsis for the whole rule. I've labeled this ACH, anything can happen. You'll notice that when we have that anything can happen, it precedes a reversal. This is without using the advantage of Fibonacci, guys, just reading triggers. Odds favorable momentum, there's one of those tails. The market continues up. Anything can happen, there's your reversal. Anything can happen, there's a reversal, odds favorable. I agree, Cam, pictures tell the story, don't they? New users. The larger down, the smaller up. It's not odds favorable. Sit on your hands. The background's green, but the triggers are red. Doesn't line up. Sit on your hands. Wait for that odds favorable, guys. This is that bit of a transition, that indecision when the buyers and sellers are fighting, right? Rule number 1 keeps you on the right side of things because the only way that you're going to enter a trade is with odds favorable momentum. So when these guys can't figure out what the heck they're trying to do, your rules keep you from getting in, from trying to predict. I see a lot of new users trying to predict that the market will go up because it's green, only to get stopped out 3 or 4 times when the triggers aren't providing that one, blowing out accounts instantly, right? So embrace the idea that odds favorable momentum sets the tone. And when you have it, let's make sure that the path is clear. Rule number 2 says termination conditions must be false. What's a termination condition? Let's go define it. Is everybody cool with the odds favorable momentum before I do this? It's important to me that you're getting these lessons. So if you're brand new in this room, Iceman Philly, we're reinforcing, right? Feeling good about it? Getting arthritis in your hands? Brand new, K-Pops, welcome. Looks like you're already on the beach. What a great thing. So K-Pops, this is your class. If you have questions about anything that I'm talking about, please post it in the room. Morocco, very nice. It's nice to have you in the room. Don't be shy. This is your room. What's a termination condition, guys? A termination condition is a Fibonacci-based indicator. Back in Dallas? Right on. I came to Oregon from Dallas. That was our last contract. I went to high school in Dallas. Nice area. What part? I went to high school up in Plano back when it was itty bitty, when Frisco. I went to Plano West in high school. That was back in the late 80s. Guys, termination conditions may reverse the market. Remember, we're playing that potential. Oh, okay. I know right where that is. What are the areas that may reverse the market? Divergence high, divergence low, right? When a price creates a pivot and there's a loss of momentum, we have a divergence low line, a cyan line. David S., I'm actually not. I'm a Texans fan, and that's hard to admit. Oh, right on. I used to bartend for Jerry back in the early 90s in this private suite. Nice guy. Pivot, divergence low, not a termination condition, but this cyan line could potentially be one. Same thing with this divergence high. Guys, it can be red Fibonacci resistance, blue Fibonacci support. It can be yellow 1-to-1 dots. These are all areas that may reverse the market. But it takes a simple 2-part recipe to determine whether or not they will. And I'm going to give you that recipe right now, guys. In order for an area to be a termination condition, 2 things have to happen. The first thing is that price has to reach that area. What does that mean? That means that these dynamic Renko bars come down and smack into support in this case. When price reaches the area, all you have to do is ask yourself, where are the trigger lines? Can everybody clearly see that the trigger lines have remained above that area of support? Therefore, this may reverse the market. It may create a bounce too big to trade. There's probably going to be some reaction to this Fibonacci area. It's behaving as a termination condition in the moment, guys. No more short trades into that area. We're waiting for the advantage of a clear path. We're waiting for no termination conditions to be true. No termination conditions are true when price hasn't reached an area, when it's a clear path, everything's wide open, or this termination condition up top, this support that was reached and the trigger lines remained above, is no longer a termination condition when both the small and the large triggers get to the other side of it. This is your clear path, guys. When both large triggers have cleared an area, when they haven't reached, price hasn't reached that next area. I've got a couple pictures. Once again, let's look at termination conditions from a high. And guys, this is going to give you not only the looks, right? We're building confidence through the repetition, through seeing the same thing over and over. It also gives you the recipe. Price reaches the area, triggers remain below. This is a pivot. This is a pivot with a loss of momentum. I know that there's a loss of momentum because that magenta line has printed off to the right. This is not a termination condition, guys. What this is a pivot. When price comes back, reaches the area, and all of your trigger lines remain below, now it's a termination condition. This is what we call a pivot stop out of a divergence high. When this termination condition creates a full reversal of the market, I'm going to refer to it as a strong top. Price reaches resistance, all trigger lines remain below. No more long trades into the area. Look how price reacts. Same thing here. Price reaches 1-to-1s. No more long trades. Look how price reacts. And it actually reacts right down into support with no triggers as well. Termination conditions both directions, guys. 90% of what you do is going to be reading your indicators, waiting for the advantages. Price reaches these yellow 1-to-1s. Absolutely no trigger lines break through, guys. You have a perfect termination condition from a bottom. This bottom becomes a strong bottom when it creates a full reversal. Price reaches support. No trigger lines break through. This is a termination condition. No more short trades, even with odds favorable momentum. When this termination condition creates a full reversal, it's a good bottom. It's a strong bottom. Just a pivot becomes a termination condition when price reaches that pivot low. All the trigger lines remain above. This termination condition becomes a strong bottom when it creates a full reversal. So guys, you're going to hear me talking about, was it a good top? Was it a strong top? Was it a good bottom? Was it a strong bottom? Because your highest probability trend trade is a trend trade that happens after a strong top or bottom in the market. Guys, that is your best chance of success as a brand new user. Visually, it's going to look like this. Price reaches support. Absolutely no trigger lines break through. You know that you're not looking for a short, guys. You go into this sitting on your hands phase. I don't have the advantage of a clear path to the bottom, therefore I'm not looking for shorts. This termination condition creates a full reversal. This full reversal gives me odds favorable momentum, and I have a clear path because all of my trigger lines are above this area and they haven't reached this area. Guys, that circle represents your highest probability trend trade. That trend trade that comes from a great top or bottom. This is a trade that typically wins 70 to 80% of the time. Guys, is everybody cool with the recipe? Price reaches an area. Absolutely no trigger lines break through. Just sit on your hands, guys. You don't have to hope. You don't have to wish. You don't have to pray. All you really have to do is run that calculation. Price reaches, no triggers. I'm going to sit on my hands and do nothing. Small and large triggers go through the area. Now that area is broken. Here's one of those potential tails. We have it right here, guys. What if you insisted on a clear path? K-pop, we haven't even talked about entries yet. Right now, we're making sure that we have those advantages on a large chart. Right now, all we're doing is we're making sure that you have the advantage of momentum and you have the advantage of a clear path. We haven't even discussed refining it down to that point where the market is likely to continue, because it's important to understand and recognize these two advantages before you look for that entry. If you put the horse before the cart, it's going to mess with you a little bit. So guys, these are termination conditions. Is everybody okay? Price reaches, no triggers, no trade. Small and large break, now you're broken. Clear path. Amazing, right? There's only one other termination condition that I want to talk about. Sometimes the market has a clear path in a downtrend and it just suddenly goes up. Sometimes you have odds favorable momentum and a clear path and that market goes the other direction, guys. There's a way to recognize this, and this is the only termination condition that I'll use a smaller chart for. And it's 3 divergences in the same price range. What's a divergence? It's a loss of momentum. That's it. The negative number means nothing, guys, but when it prints and gives you this line, I know that this pivot had a loss of momentum. Momentum's not following price. When it happens 3 times in the same location, it may terminate the trend. There's that powerful word, right? It may terminate the trend. It's not guaranteed to terminate the trend. It is not definitive, but it removes that advantage of a clear path. This becomes even more powerful when your trigger lines work their way inside of the large, smalls inside of the large. You have anything can happen triggers and 3 losses of momentum. It becomes even more powerful when that third divergence is higher than the previous. This is a head and shoulders pattern, guys. Loss of momentum. Price exceeds that loss of momentum. Triggers are still strong. But then we get price can't exceed the previous. Momentum has gone from odds favorable to anything can happen. And we've had 3 losses of momentum in the same area, guys. You're going to see 3 divergences from a low or 3 divergences from a high when this is happening on the 13-2. So guys, those are your termination conditions. Termination conditions determine whether or not you have a clear path. So far we have the advantage of momentum, strong triggers, smalls outside of the large, space between the two. We have the advantage of a clear path because price has not reached an area. The trigger lines have a clear path. Everything says go. No termination conditions are present. So K-pop, now we're going to talk about it. How do we find an entry? How do we get in at that point where the market is most likely to continue? It's a pretty easy process, but this is the one that might take you a week to become good at rather than the 38 seconds it took you to recognize momentum. During the live market, this is going to be the look on your 5-1 on your smaller chart, guys. Your triggers should be strong. Your small triggers should be outside of the large triggers. Large triggers should be what we call favorable. And favorable large triggers mean that the large triggers on your 5-1, those smooth triggers, and your synthetics. Your synthetics are these stepped triggers. They should be overlapping, one on top of the other. It should be like 2 snakes behaving as one. Because when you have this look, when the trigger lines are one on top of the other, it's going to give you the most consolidated window of opportunity, the smallest point where the market is likely to continue. This is an advantage. Your synthetic triggers are nothing more than the 13-2 large triggers, which means that you can't have odds favorable momentum if these aren't strong in the direction of the trend. So when those overlap, we call them favorable large triggers. Your job when everything says up, when it's time to look for an entry, is to make sure that your triggers are heading that direction, that they're strong, that they're wide, that they're overlapping. You want strong triggers, odds favorable momentum on that 5-1 chart, and you're just going to identify the areas that are falling inside of those favorable large triggers. The areas that we'll take a trade from, and we always trade from areas, I always trade from areas, I hope you do too, can be a mid-band, yellow 1-to-1s, or fibs, Fibonacci support or resistance. Right now, all we're doing is we've made the decision that it's time to take a trade. I'm focusing my attention, fibs, mid-bands, yellow 1-to-1s, and I want them to be inside of those favorable large triggers. Rule number 3 says that we're going to use a limit order, meaning that you're going to be able to wait for the market to come back to you. You're going to use a limit order to buy or sell a pullback. Remember those yahoos that fight trend, that fight momentum? This is where we count on those guys. We're going to use a limit order to buy or sell a pullback at an area, fibs, mid-bands, or 1-to-1s, inside of those favorable large triggers. So we need that pullback to begin. And the pullback starts with a reversal bar. And this reversal bar lets me know that that small mentality, that small crowd, is starting to push. And at the time of this reversal bar, I'm going to look from the highest point of my large triggers, my favorable large triggers, to the lowest point of my favorable large triggers, and I'm going to identify the areas that fall within. These trigger lines are coming up like a shark about to breach. If a mid-band is a tick or 2 above, it's probably going to get swallowed up. So I'm identifying the mid-band. I'm looking at support, and 1-to-1s. I've created a window of opportunity from the highest point of support to the lowest point of support inside of favorable large triggers. If you're looking for a short trade, you're going to look from your lowest point of resistance to your highest point of resistance inside of favorable large triggers. Your job is to right-click on your chart and activate a limit order at the top of that window. You're at the top of that window because you have odds favorable momentum on the 13-2. That market is screaming to the upside, and there's absolutely nothing in the way to slow it down. You're going to activate that limit order. You're going to sit on your hands and realize that you're not in charge. And one of 2 things are going to happen. Either that market's going to continue with the momentum, you're going to watch it go away, and you're going to have small feelings of regret, but you're going to feel good about the fact that you followed your rules, or it's going to come back and it's going to reach that highest point of support. And I'm going to take a picture of this picture. Your window of opportunity, you can create this with drawing tools in the moment, from the highest point of the triggers to the lowest point of the triggers, and then we're going to refine it even more. From the highest point of support to the lowest point of support. Guys, your limit order goes right here. And if that market fills you, you're in the trade with the advantage of momentum. You're in that trade with the advantage of a clear path. You're in that trade with the advantage of an entry area, that area where the market is most likely to continue. Your chart reading got you to this entry. Your initial stop, guys, is going to go below the window of opportunity where the market should not go. If the market exceeds this window of opportunity, you no longer want to be in this trade, right? You've lost that advantage. When you entered the market, you waited for the pullback, right? You have to fully expect it to potentially go to the bottom of that window. And you have to be okay watching your P&L bounce against you just a little bit. It's okay. But because you wait for that entry at the area inside, your profit potential grows exponentially. When that reversal bar prints, you're going to take your stop and you're going to move it a couple ticks below it. Your risk has been reduced quite a bit. Guys, this is a trade that I'll take 1,000 out of 1,000 times. Wild horses couldn't keep me out of this trade because 70 to 80% of the time, this is my result. Profit target reached. Guys, this is your plan for success in the beginning. So K-pop, that's it in a nutshell. How to do it straight from the user manual. Let's go back and see if we can find a real world example. Well, let me get my indicators back on here. While those indicators are coming through, let's talk about how to study, guys, and we're going to do it together right now. You can scroll back on your charts, on your large charts, and wait for strong triggers. Look for no termination conditions. If you see this happen, historically, circle the tail. That potential pullback on the 5-1. If your circle, or your square in this case, comes back to an area of support inside of favorable large triggers, you know that you have a rules-based trade. You know that you have a trade that wins more than it loses. You know that you have a trade with 3 very distinct advantages. Take a picture of that trade, guys. Upload it to Screencast. Open up your spreadsheet. Right here, I have 220-ish pictures of high probability trend trades. I'm going to right click and I'm going to click the link button and I'm going to turn this into a hyperlink. And I'm just going to say, best of the best long, right? It fits my rules. It has the advantages. This is the trade that I never, ever, ever want to miss. Guys, you can take 30 minutes this afternoon and scroll back 10 days on the NASDAQ. You can scroll back 10 days on gold. You can scroll back 10 days on the ES. And you can scroll back 10 days on crude, right? 4 markets. 40 days worth of data, and you can start taking these pictures and reinforcing and building trust in the rules. Remember that you are not trading the tails, guys. If you wait for the tail to form, that market's long gone. You're trading areas inside of favorable large triggers. But this is how you study it. Let me put this in the room. I told you I'm going to give you everything that you need. I've given you the rules so far, right? I've given you the advantages. We've defined the advantages visually. We've talked about what they mean. And then, guys, we can just scroll back and let's find one. Here's odds favorable. There's a tail. Let's see what it looks like on the 5-1 if I scroll back. It may or may not be a trade. I'm not sure. Pulls right back to an area of support inside of favorable large triggers. I feel good about that one. Let's scroll back and see if we can find another. Guys, this is 1 day's worth of giddy up on the NASDAQ. We're only back to 8:45 in the morning. Let's see what this one looks like at 8:45. All you're concerned with right now is entries. Being able to recognize pullbacks to the area of support inside of favorable large triggers, guys. From the top of the window to the bottom of the window. You're creating trust through recognition, right? You're creating trust through these pictures by asking yourself, do I have the best of the best? Do I have the advantages in place? Was that market odds favorable? Did it give me a pullback to an area of support inside of favorable large triggers? Start snapping those pictures, guys. This is how you study. The most successful people, the people that get it the absolute fastest, are the people that work their tails off to prove me wrong. Prove me wrong, but do the work. I'm going to make it easier for you. First thing I'm going to give you this morning is a checklist. Print this out. I'm going to put it in the room, download it, click it, drag it over to your desktop, hit print, and have 10 copies of this right in front of you, guys. As you scroll back and you look through the rules, make sure that you're following them. Is the market coming from a good top or bottom? Brand new users, click on that video link and watch that short video on tops and bottoms, recognizing these reversal points in the market. Reinforce those lessons about termination conditions. You can still have a great trade without it, but it increases the likelihood of success. Did you have odds favorable? Were there no terminations? Did you have an area inside? I've never had anybody use this checklist for a week and do worse than 75% winners, guys. Never. In the history of teaching this class, it's never happened. You're going to be tempted to break outside of it. There's no reason to. Scroll back, see how many opportunities there are. I'm also going to give you this exact same checklist, but visually. I've stolen pictures from the user guide, visually identifying what each of these rules means, guys. This is your resource to check out every day in the morning. And then I'm going to share with you guys the most simple plan for consistency. I'm not telling you how to trade, but I'm telling you that the people that trade this plan have been proven to win more than they lose. The people that adhere to these rules typically win more than they lose. The people that embrace these advantages typically win more than they lose, guys. You're going to write a plan for yourself. Until you have the chart reading to do it, steal this one. Put your name on the top, guys. I'm not going through a plagiarism factor checker here, right? The simple plan for consistency, guys. I can't stress this enough. Never fight the direction of your large chart. Strips you of advantages. Never fight those triggers on your large chart. Don't trade against strong triggers. Strips you of advantages, guys. These two little omissions from my daily trading probably took away 50% of my losers. And sometimes it's not about catching every trade. It's not taking the poor trades that take those profits that you make on the best trades, guys. In order to take the trade, these rules have to be met. And my goal is to keep it super mechanical, right? I don't want to form an opinion. Either I have it or I don't. And if I get to the point where I don't have it, I don't take the trade. There's only two options for me as a brand new user. Rules met or rules not met. That's it. And it takes the pressure off of me to be right, to predict, to hope, to pray, to wish, to do all those things. Either it's happened or it has not. Guys, your trading plan as a brand new user is a third of a page long. The same way your entry is mechanical and that's your focus for 20 days, you can do the same thing on your management. Every great entry creates a management opportunity. If you're trading two contracts, your initial stop can be 12 ticks above the window of opportunity. That stop will be moved once you get that reversal bar, the direction of the trade. Trying to figure out where those pictures went. Here we go. If you take the best of the best entry, your initial stop goes outside of the window of opportunity, guys. Looking for $100 and $200, $300 worth of movement in a high probability trend trade, guys. That's all you need, right? Your goal should be about $250 per contract. 2 trades, 2 winners, put you at $600 a day, guys. That's $3,000 a week. That's a pretty good week, isn't it? Isn't that a $12,000 month or $144,000 year? From the highest probability mechanical entry, guys. From the highest probability mechanical management. Once that market moves in the direction of your trade, reduce that risk. Your losers are typically considerably smaller than your winners. Or your winners are larger than your losers, excuse me. Your first target is $100, guys. And when you reach that first target, go break even. $100 in the bank, zero risk. Zero risk at that point. You have absolutely nothing to lose. You have a dopamine kick from the success. And you're not going to move it until either the second target is hit or you take a break-even trade on that second one. No harm done, right? And still $100 in the bank. And then the goal, and the reason that everything is so tight with those targets initially, is that if you're actually following the rules, the likelihood of hitting that second target goes up exponentially. This is a $300 trade, guys. Based on the highest probability entry, the most mechanical, pragmatic, emotionless, opinionless management. Is everybody cool with this? I put it in the room. Guys, download it. Embrace it. Let me know how it works out for you. When people give me feedback, the feedback they give me is, holy smokes, guys. I kept it simple, I kept it focused, and I keep winning. And people start posting in the room, I made 80%, 70%, 90%. I keep winning, Mark, and then that's when they get smart and they're like, well, I'm so good at this, I'm going to abandon everything that made me successful. And that's where traders typically have problems. Guys, when there is nothing to do, it's difficult to do nothing. It really is. That's the hardest thing to do. If you break your rules and you get lucky, you're creating this muscle memory for long-term failure. Stick to your plan, stick to your rules. Guys, you're going to have losers. Losing is a normal part of a positive equity curve. I can't stress that enough. And then this is probably my favorite little snippet. This is from the late Mark Douglas, who was an amazing coach in regards to the mental side of trading. When you stop expecting to win every trade, you begin to win more trades, guys. When you take that pressure of having to be right off of yourself, it gets easier. And I don't care about the result. And guys, it took me a long time to say that. I had to develop the trust in the rules until I quit caring about the result, and I only cared about the execution of the method. Because the method has been proven to win more than it loses, guys. So this morning I was talking about trust, right? I'm talking about building trust in the market, building trust in what you see, understanding when the advantages are present, understanding when the advantages are not, making sure that every time you're looking at the market, you're giving yourself the absolute best chance of success. Because confidence comes through the memory of success, guys, and that's the goal. Mark Douglas is a must-watch. I agree 100%. And guys, if you're interested in going to look at some of that Mark Douglas stuff, if you go to the YouTube page for NextGen, I'll give you the link to it. I hope you're going through here and just looking at videos all day long anyway. Down at the very bottom, it'll take you over to a Mark Douglas playlist, guys. If you've never really looked into the psychology of trading, it's fantastic. If you want to look at this video after we record it today, I record these every day. They're not available live during the classroom because I want you in the classroom. But if there's some lessons that prove to be very helpful to you, you can go back and you can study these. The first hour is the rules. If you're studying the rules, go back and look at the first hour. It'll help you a lot. Know where the resources are. Man, those are great, Cam. Know where the resources are. Know where to find the things that you need. Everything you need to be successful. And guys, I can't stress this enough. Everything that you need to be successful is either in that resource page, the tutorial page, or over here in Discord. Discord has everything. It has your 101 basics, right? It has the trigger reading. It has the short version. Here's your short version for a successful plan. Learning more, user guides, trading rules, market flow, chart reading. Every resource you need to study this material is made available to you, and then I'm available 15 hours every week to give you feedback. Our first hour is done, guys. We've gone through, we've talked about the rules, we've looked at the advantages. If you're brand new right now, you're saying to yourself, pardon my French, holy shit, this is like taking a sip from a fire hose. It's a little overwhelming. Everything's there. Guys, repetition is the key to success. We're going to talk about the same thing all day. We're going to use checklists every day. You're going to annotate charts every day. When you went to college and you were an engineer student, they didn't let you build a bridge. You didn't have the tools or the repetition yet. First year med students don't perform surgery, right? Guys, this is an education. Let yourself be a student. It's okay to be new, but start asking a million questions. Is he really, Cam? I hope to see him in the room. You know what? I love the father-son combos. We had another gentleman. His son came in, did a lot of work with them. We have husband-wife combos. Big fan of those as well. Guys, this community is outstanding, and it's very supportive, you'll find. I'm going to take a minute, and I'm going to go stretch my legs real quick, guys. I'm going to take a deep breath. I firmly believe that sitting in front of the market nonstop is rarely the best bet. Get up, stretch your legs, walk around, take a deep breath, do a little yoga, whatever you need to do. When I come back, we're going to look at the pictures that you guys have been posting, guys. We're going to look at the live market. We're going to look for advantages. We're going to talk about disadvantages. We're going to talk about what we see, such as price reaching support and absolutely no trigger lines breaking through, knowing that it's too soon for shorts because this market may bounce, right? We're going to talk about the fact that this is a bad top. This is nothing more than a pivot. Nothing more than a pivot with divergence. It's not even a termination condition. This is a bad top. Even though it was a termination condition, the market never reversed. Ultimately, the market continued up. We're going to talk about all these things over and over until they're stuck in your brain. Brand new users, do me a favor. K-Pops, Iceman, all you guys that are brand new in here, post a picture, write something on it. Let me know that you're comfortable with it. And if you're not, ask for help. Let's go through it again if you need the help, guys. I'll see you in about 5 minutes, and we'll get into those pictures. All right, ladies and gentlemen, here we go. Second hour, we're going to talk a lot about all the stuff that you've posted. For you new users, just so you know, when I go through, I have to scroll up to the very top. Discord doesn't have a convenient way of putting everything in order for me. So I'm going to go through and we're going to talk a little bit about what you guys have posted. I want to encourage you, if somebody takes a high probability trend trade, steal that picture, put it in your spreadsheet, right? Their trade should be the same look as your trade. What a great thing to study. Bobby got us going today. And guys, I want to show you the advantages of chart reading. And Bobby does a great job of annotating his charts. He has one of those pivot stop outs right at resistance that creates a full reversal that gives odds favorable momentum. Guys, this is a strong top. This is a good looking top. This is a top that may reverse the market. The one thing on this chart that didn't get noted is this divergence low. This cyan line. The small triggers haven't even broken through it yet, guys. This is a termination condition textbook. And it doesn't mean that it's a horrible trade. It doesn't mean that it's not a good look. It just means that you want to take a second. You want to make sure that you're identifying these things. Because remember that everything that you do in pictures is designed to be studied the next day, right? Every trade that you take on a Monday, you're going to study on a Tuesday. And you're going to go back and you're going to study the previous day's trades. The better you annotate, the more truthful you are in your annotation, the more effective that annotation becomes. You're going to be able to identify what worked, what didn't work. If there were problems in the way, guys, it's okay to put them on there. Because what happens is you're going to begin to see this reoccurrence of situations. You're going to take maybe a trade that breaks the rules, and you're going to get lucky just enough to believe that it's a great trade, right? And then when it loses 10 times in a row, you're going to wonder why the hell you keep losing so much. If you go back and you look at the exact same trade and you've got 20 with the exact same annotation, you've got a sample that you can determine whether or not it wins more than it loses. What feels easy, what's relaxed, and go back and do that study every day. It's going to make it easier for you. I like the look. I don't think it's a bad trade, but I think that recognizing that recognition, and that way if you go back and this holds and the market goes up, you can say, all right, I have a tendency to trade into divergence lines. And it doesn't work out as often as it does. So make sure that those annotations are there and present. And then I did a little study this morning, guys, and I did these not to show off or anything, just using a checklist. Guys, when you're done with a high probability trend trade, you're going to work yourself into what's called a medium probability trade. And a medium probability trade, let's just go straight through the definitions. A medium probability trade means most of your indicators line up for a trade. However, a small issue exists. Notice that issue is singular. A small issue exists. And this is probably going to be the vast majority of your trade, guys. You're going to get so good at chart reading that you're going to step outside of that comfort zone of the high probability. You're going to work your way into that medium probability. Your ability to read charts is going to identify that small issue, singular. This will be the vast majority. When you're executing medium probability trades, you have to manage them assertively. Being able to manage them assertively is key because remember, it's medium probability. It's less likely to win. You're going to have to be aggressive with what you're doing. You're going to have to identify problem spots with your chart reading, maybe take quick profits, get to a zero loss level. Guys, one of the most valuable tools that you can use to help you manage a medium probability trade is divergence on the 5-1. If you enter a trade at the area inside of favorable large triggers and it's a medium probability scenario, you can use divergences to aggressively manage the trade, to get to a zero loss level, to not lose or to win small when it's a maybe trade. The first trade that you're going to take, probably as a brand new user, is what we call a 50-50 trade. I want to show you the picture. A 50-50 trade means that your small triggers have broken through an area, but your large triggers haven't broken through yet. We know that no triggers through is a termination, that all triggers through is a clear path. But when the smalls break through and the large don't, this is what we call 50-50, and it's not a reflection of your chances of success. A 50-50 simply means that 50% of your trigger lines are through, 50% of your trigger lines are not. This area has the potential to break because of odds favorable momentum, but it's not a clear path. This not having a clear path becomes your one issue. We've forfeited the advantage, therefore, we don't want to forfeit the advantage of momentum. We don't want to forfeit the advantage of an entry area. So I've created at the tail end of that super simple plan. This is so big. Let me see if I can make this smaller. Whoops. Created a checklist for the 50-50, that first medium probability trade. I'm going to try and make this picture a little bit smaller. My apologies. But this was some of my study. Well, it's just going to stay big, it seems. I'm not sure how to fix that. There we go. I'm using a checklist once again, guys. This checklist is right there on that KISS plan, that Keep It Simple Sunshine plan. I've identified a 50-50 trade, right? 50% of the triggers are through, 50% are not. I do have odds favorable momentum. I do have smalls outside of the large. No divergence on the 5-1 becomes a condition for that 50-50 trade. Why? Because once I have divergence, I have a loss of momentum. If I have a loss of momentum, now I've sacrificed 2 items in that high probability scenario. And when I get a no on my checklist, it's just no trade. It's rules not met. It becomes easy, right? 50-50 trade, divergence prints, I'm not taking the trade, and there's that trade going off into the distance. And then the next link. Guys, these are great ones to steal. There's that 50-50 look again, right? Smalls below, larger above. And do you notice that there's 2 areas that haven't been broken, not just one? I have 2 areas of support that the large triggers remain above, which means that it's not a one shot. That's going to take away an advantage. So I go through it. Do I have odds favorable momentum? I do. Smalls must be outside of the large on the 5-1? Absolutely. No divergence on the 5-1. Man, I'm doing great. Am I coming from a good top or bottom on the 13-2? Is it a termination condition that creates a full reversal? Not quite. We didn't reach that Fibonacci area, so technically no. Once again, not a good top. I'm not taking the trade. No matter what happens next, I'm not taking the trade. Guys, committing to these checklists, the checklists aren't designed to keep you out of the market. They're designed to keep you from getting into the market when the conditions aren't right. Trend trade checklist. This is that same one for the high probability trend trade, guys. Everything is down and I'm looking at it and it's red and all my triggers are pointing down, guys. Is the market coming from a good top or bottom? It probably is, right? Do I have odds favorable momentum on both charts? I don't. My smalls are inside of the large. I have loss of momentum over here, right? I don't have strong triggers, no separation. Once again, I click no, I don't take the trade. My checklist isn't met. Guys, embrace this simplicity in the beginning. It took me 6 minutes to scroll back, to take these 3 pictures, to look at these charts. In 6 minutes, I reinforced and built trust in my rules, right? My rules kept me safe, kept me out of 3 losers 3 times in a row. You need to have this kind of thing. Uh-oh, Philly, you posted a picture, but it didn't come through. If you want to double check your links, let's see what happened there. Is that the same one? Screen wreck. There we go. Got it. Let's take a look at what you did. So divergence, small and large over the fib line, absolutely. Small triggers above the large triggers. but losing momentum. Strong momentum, absolutely. Large triggers show a clear path above the small triggers. And you said short trade, triggers above. So you wanted to go short right here, Philly? Am I reading that correctly? You wanted the market to go down. Cool. Man, great job annotating. Let me show you some stuff. So Philly, what direction is the market headed based on the background color? It's going up, right? Do you see it? It's going up. It's going up. And not only is it going up, but it's coming from a termination condition that created a full reversal. Everything says up. Your large triggers are strong up. Look at those things. Whoops, wrong one. Let's use the arrow. Your strong triggers are strong up, your large triggers. Your small triggers are still outside of the large triggers. They're slowing, but they're still outside of the large triggers. Your direction is up. Your triggers are up. Everything on these charts say up. And Philly, you want to go down. Do you see the conflict of interest? And some brains see down easier than up, right? Somebody mentioned yesterday that they see long trades way easier than they see short trades. So, Philly, what if, you ready? What if you said, I have odds favorable momentum, right? My trigger lines are getting above the area. Wouldn't it be easier to enter at an area of support inside of favorable large triggers and make all of this money all the way up to that potential termination condition? Wouldn't that be easier? You're doing a great job reading, right? So if you always miss the easy ones, but try to take the hard ones, what are your chances of success, do you suppose? Because if you went short right here, you got stopped out, right? It happens. So how do you get better at it? Philly, man, this is how you get better at it. Is you scroll back and you look for those tails, right? And crude hasn't been that great. Let's go to a different market. You scroll back and you look for those tails. You look for that odds favorable momentum. You look for the smalls through the area. And you circle it. And then you burn this image. You can go up or down. You can do whatever you want. But doesn't it make sense if you go up or down that you have momentum, a clear path in an entry area, because it's been proven to win more than it loses? So Philly, your job right now is you're just developing trust, right? You're trying to be with the right side of everything. The first thing that you can do to give you that huge advantage is trade with the trend on your large chart. If nothing else, it keeps you from fighting, right? And then the second thing you can do is never fight momentum on your large chart. Remember, that's the opinion of everybody in control of the market. These two things right there are going to keep you on the right side of things 90% of the time. Does that make sense? 90% of the time, that's going to keep you on the right side of things. And then from there, when you have that momentum, when everything says up, it's okay. You should, Philly. You're brand new. I couldn't spell in kindergarten. By the time I got to 4th grade, I was pretty good at it, right? There was a point where I couldn't reach things on the top shelf. Now I can. So where you're at right now has no reflection on where you're headed. Not at all. You're on a path. So every time you post these pictures, we talk about how am I going to get you to that next step in the path? And the easiest way to do it The easiest thing, remember, work on one thing. You retest them all morning? So work on one thing initially. Write it down on a piece of paper and just say, you know what? I'm always going to trade with the trend. That's it. If the trend is up, I'm only going to look for long trades. If the trend is down, I'm only going to look for short trades. And get your brain wired. Don't worry about anything else. Don't worry about entries. Don't worry about exits. Don't worry about winning. Don't worry about losing. And then when you have convinced yourself, I'm only going to trade with the trend, say, all right, now I'm going to make sure that I have odds favorable momentum with that trend, right? We're not losing 50 pounds. We're losing a pound a week for the next year. That's it. We're taking one step. And you're going to wire your brain to say, this is what I'm looking for. First, I'm going to look for the trend. Once I've established which direction it's going, I'm going to make sure that I have momentum, right? I'm going to make sure that I have strong triggers that trade with the trend. And then you're going to take the next step. What's the next step? Making sure that you have a clear path. So now I'm going to trade with the trend. Now I'm going to trade with momentum, but I'm going to make sure that I'm not banging my head on anything. Make sure that there's not any sort of problems in my way, right? Step by step. What's my trend? Where's my momentum? Do I have a clear path? And then once you do that, you're just going to say, well, when I have a clear path, when I have the trend, when I have the momentum, then I'm going to look and see if there's a bounce spot on a small chart. The problem with being a brand new user is, guys, you're all brilliant. Every one of you is so stinking smart, it kills you. And you start saying, what's going on 6 steps ahead of me? I wonder what's at the finish line. The starter pistol hasn't fired yet, but I wonder if the after party's a good one, right? Guys, this is incremental. This is step by step. You're building a foundation. And your foundation starts with trend. And then from that trend, it builds into momentum. And from momentum, it builds into a clear path. And from a clear path, you begin to look for your entries. If you start looking for your entries before you can establish trend, it's probably not going to work. If you start looking for your entries before you establish momentum, it's probably not going to work. And then here's my tongue-in-cheek. This is my favorite thing. John Novak wrote this book, How to Commit Financial Suicide in One Easy Step. And guys, this is a joke. Note that there's only one page with information. All the other pages are blank. Guys, he did this because new users love to trade against the triggers. Surefire way to be separated from your money. They trade into termination conditions. Guys, these are the 2 biggest account drainers for new users. Show of hands. Guys, let's let Philly know that he's not alone. Who's fought trend? Who's fought triggers? Who's traded into termination conditions and had their butt handed to them? Guys, it took me probably a year to grow out of that habit. Everybody does it. And then back me up one more time, please, guys. When you started trading with the trend, did it help? When you started trading with the clear path, did it help increase the results? And then finally, when you got comfortable with that concept and you started trading from that entry area, didn't things get easy and effortless? Guys, I'm never going to abandon you on this trip. Never, ever. But we're going to talk about how you're doing it and how you can do it better every time you post a picture. And you're going to get feedback, and you're going to get honest feedback. If you want someone to lie to you and tell you how great you're doing when you're really not, go post a picture on your grandmother's refrigerator. She'll tell you that you're brilliant. All right, Gary, your 13.2 says up. Your 13.2 has pretty strong triggers. Your 5.1, 09, 09.75. Your 5.1's kind of giving up the ghost, right? You're weakening here, and you've already had a couple losses here. It's interesting that your 21 printed on the 5.1, but not your 13.2. Don't have areas inside anymore. 2 losses of momentum. Kind of an ugly look, and you chose not to take the trade. Great read, Gary. Great job sticking to your rules there. All right. Mike M. Let's take a look. I'm going to take a picture of your picture, Mike. Guys, sometimes it sounds like I go on a soapbox. I apologize if I do. I take a pretty real interest in your success. All right, so Mike, you say 50-50 trade, right? So let's go back to that basic definition. What's a 50-50, Mike? 50-50 has nothing to do with your chances of success, right? It means that 50% of your trigger lines have broken through an area, 50% have not. That's all it is you're identifying that an area hasn't yet broken. So what you have is the momentum is waning a little bit, right? That momentum is kind of dying down. That's all it is. Unless we're talking about the first one. That's 50-50. I got you. Sorry. I was looking at your second trade, not your last one. So 50-50 trade. Divergence printed, but you left the order in. No worries. And you're a little bit above that area inside of favorable large triggers. You decided to take support rather than the mid band. You made a choice. It worked out. Mike, the only thing that I would ask is if you get in high, are you willing to leave the stop in place? That's the only thing that happens when you get in a little early as you increase risk. Sometimes it's a calculated decision. The market goes up, beautiful exit, making money all the way up. 5 points feels good, doesn't it? And then you decided to take another entry. Again, not from an area. That's okay. Rule number 3 not met. In 0875, and that one actually comes right back to the mid-band, just about, right? And then you get 1 divergence, you get 2 divergence, and then you get a pivot stop out and you say, you know what, I'm not willing to lose money when things are changing, momentum's going away. I think it's a great look. I think you had the advantage of momentum all the way up. And guys, when momentum is the first thing that you're looking at, it helps, doesn't it, Mike? Makes you feel good. The market's likely to go up. And then when that momentum begins to get lost, you make decisions to not lose money. I think you did a great job across the board. Guys, you don't have to follow the rules to the letter for it to be a great trade. But if you start by following the rules to the letter, you're going to know when to break them, right? You're going to know when you can stretch them a little bit, when you can fudge them, because there's so many advantages present. Great trading, Mike. Thank you for posting. And then Paul. It is a strong trending market and you have a clear path. And then Paul has a trading plan that says when the market is trading strong, when the path is clear on my large chart, I'm willing to take a mid-band entry until they no longer work. Looks like you took quick profits on the first one. You got to break even as quick as possible because it is a medium probability trade. You had support backing you everywhere. Paul, I think this is great execution. And I think it's consistent with what you do every day. Nice job. And then David S. Trend trade. Stop was too close. Was it? David, was it too close? Just because you got stopped out doesn't mean it was too close, right? So let's look at what happened. And guys, you're going to hear me say it all the time, and I don't ever mean to sound aggravated. If you don't write your rules on the chart, so David, help me out here. David, did you have odds favorable momentum? Were the smalls outside of the large? Were the large wide? Were they angled in the direction of the trend? I feel like that's a no. Let me put my checklist on it. We can't tell if it's a good top or bottom, right? So we'll just put it right in the middle. I don't have odds favorable momentum. What I do have is anything can happen triggers, right? Smalls are inside of the large. The large are not. There's zero space between the two. The market is trending, but if I'm brand new and I'm looking for consistency, that's my best look for longs. That's odds favorable momentum. But that's okay. We'll give you that one because it is a strong trending market. So let's look at the next thing. Did price reach an area and absolutely no trigger lines break through? Termination conditions not true. So that's a no, as well as that being a no, right? So we don't have the advantage of that odds favorable look, and we reached resistance, and absolutely no trigger lines broke through. So now we're trading into a termination condition. And just for the trifecta, this trade didn't come from an area inside of favorable large triggers. All of your areas are down here on the wrong side of the large triggers, right? And guys, this isn't me beating David up. This is saying, hey, if you just write your rules on the chart, this wasn't your problem, was it? The stop being too close? That wasn't your biggest challenge. That was the least of your worries. These were the challenges that you faced before you ever got into the market. This may have a little indication of why this didn't work out the way you wanted it to. Does that make sense, David? And really everybody in the room. Your stop wasn't too close. You didn't have momentum, a clear path, or an area inside of favorable large triggers. So get in the habit of writing your rules on the chart. You'd be amazed at how much quicker, how much faster things start to come together. And absolutely, this checklist, David, do you guys know this checklist came to be? This simple plan came to be. I had a gentleman that was chasing everything in the market. He was trying to catch every turn. He was going short when the market set up. He was going long when the market set down. He was fighting trigger lines. He was looking for edges. He was looking for high volume areas. He was looking for momentum. He was looking for counter. I mean, this guy was looking for everything. And he was winning for all of those amazing efforts, about 2% of his trades. And this was a guy that was too stubborn to use simulator. Well, I can only learn if I'm throwing away all my hard-earned money. And he did. He threw away tens of thousands of dollars trying to do everything. So he and I were on the phone one day. I was doing a favor for one of our salespeople. He goes, man, I need you to talk to this guy. He's hurting himself. And we'll say his name was Billy Bob. And I said, Billy Bob, let's try something. Let's focus on one trade, right? Let's focus on one scenario that wins more than it loses. And we created this checklist together. And we really created this simple plan for consistency together. And guys, I've been teaching the classes with it for the last 2 years because it is so powerful. Because about 3 months later, Billy Bob came back to me and he said, you know what? All I needed, Mark, was to refocus. And I'm at about 85% winners right now. I've made back almost everything that I lost. I've let my profits add contracts. So while I'm looking for this perfect one on a 2-lot initially, he goes, Mark, I'm up to a 20-lot. Every time I make $100, what I'm really making is $2,000, right? Every time I'm making $2,000 in the market during the day, what I'm really making is $40,000 because it's a 20-lot. But it was the same simplicity. Guys, use this checklist. It has been proven to put you on the best path. And if you follow it, and you commit to rules met or rules not met, guys, what an amazing thing. Iceman, post it in the room. Whoops. All right, Iceman, let's see what we have. First picture. Good stuff. Are you with me in here? I like what you did. I can see it. It's good. You got it to screencast. Everything is awesome. Let's talk about going from good to better, right? Using that TechSmith capture. When you click that big red button, guys, always left click and drag it all the way down to the bottom right. Give me both charts. Give me that large chart. Give me that small chart. Let's make sure that I can look at everything, that we can circle, right? That we can do areas. We can highlight, and that you can write each and every one of those rules right on the chart. Great picture. That'll get you to that next level. Yeah, no, I love that you posted a picture. Guys, is it just me, or did this odds favorable momentum, everything says down, everything is screaming giddy up, pulled right back to resistance inside of favorable large triggers? Are you guys beginning to notice that this happens at least 3, 4, 5 times every day, right? Guys, what if you take 5 trades a day that are only high probability trend trades? If you're looking at 2 markets, it should be no problem, right? 5 trades a day at $300 a trade, right? Let's just say there's 1,500. We lose 2 of them, right? We're down to 1,000. So we're 3 for 5. We're about 70%. $1,000 in equity. We're like, man, I'm killing it, right? Well, 2 of those 3 were only $100 in break even. So now you're only up to $500. That's okay. $500 is $250 a contract, isn't it? That's a $2,000 week. Guys, that's an $8,000 month. That's a $96,000 year. Based on taking 5 trades, losing 2 of them, going break even on 2 of them, right? That's pretty outstanding. But guys, what happens to that $500? And then I broke rules, right? I didn't follow that checklist and I lost 200. And now it's a $300 day. Now I'm up to 6 trades, but one of them shouldn't have even been a trade. And I do it a second time. I break my rules again. And now those 3 amazing trades, that $500 is gone. It's down to $100. Guys, $100 is still a $500 week, a $2,000 month, a $48,000 year. But wouldn't it be amazing to eliminate the mistakes? Wouldn't it be amazing to not trade in determination conditions, to not fight the trend, to just take the best of the best, let that money be made, whether it's a full win or whether it's break even, and not eliminate those profits from your P&L by taking the wrong trades? Guys, I can't make this stuff up. You're watching it happen live. Odds favorable, no terminations, no divergence, pull back to support, goes from the top of the window, and it goes from 55 to 71. What is that, 26? What's 26 times 5, guys? I'm not a math guy, but I do have a calculator. 26 ticks at $5 a tick, guys. That's $130. That's not so bad on one contract, right? What's 130 if you're doing it on a 10 lot? Well, that's a pretty good 8 seconds of your life. That's how you have to look at it, guys. The absolute best of the best. And if you missed it, you either weren't looking at the charts, right? Or you don't trust it. And why don't you trust it? Sometimes you don't trust it because you say, I don't want to watch it go to the bottom, and that scares me. So I'm going to put my entry at the bottom in case it comes down here. And you trip over pennies and miss all the dollars, right? Or you say, well, I'll put it at the synthetic triggers, but not at the area inside of the synthetic triggers. But if you were watching it and you were following the checklist, guys, after you got that reversal bar, you had 4 ticks of risk on a high probability trend trade that came from a termination that created a full reversal that gave you all of the rules met. In a beautiful situation, your job is to develop that trust, guys. If you looked at it, so Philly, here, I'm going to give you a copy of my spreadsheet. There's 220 rules-based entries. This is going to burn into your brain what it is that you're looking for. K-Pop, steal it. Iceman, steal it. Guys, make this yours. Look at it. What's it look like when it's a perfect trend trade long? Looks like that, doesn't it? Guys, I can click on this all day long. And you know what? Honesty in advertising. Here's a perfect high probability trend trade short. It was so good that I stole it from Jose and put it into my checklist. Odds favorable, no terminations. Guys, it's the best entry ever. And he lost. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Guys, you have to be okay with that. Losses are a normal part of a positive equity curve. It happens. It's totally cool. There's that 50-50 trade, right? Divergence prints. You may not take this one. If you did take it, it went all the way up to a Fibonacci resistance. If you chose not to take it because your rules weren't met, great job. Great job following your rules. This is why we respect those divergence lows, right? Look at that. Damn near to the tick. And that market's reversing. Everything says up. Oh my gosh, there it is again, guys, to the tick. If you don't think these divergence highs and lows are powerful, there you go. To the tick. I love it. Over and over. Let's get back to pictures, guys. Sorry, I go on tangents every now and then. If you're not absolutely floored by this software, let me know why. Let me know what about it that isn't speaking to you. Gary says, termination condition, who cares what's going on? I'm not taking the trade. What aren't you sure about? Was there a market flow signal? So Gary says, not sure about this one. 50-50 trade with a market flow signal. Gary, those small triggers aren't through the area, therefore it's a termination condition, right? Does everybody see that? It's a termination condition. Those triggers aren't through. And even if it was a 50-50, that's not odds favorable momentum, right? Isn't it better to just sit on your hands? So Gary, market flow signal doesn't mean a darn thing if the rules aren't met, guys. If you're going to add another chart, if you're going to say, you know what, I can't do it on 2 charts, I need more charts, learn how to use that chart. And be confident with that chart before it ever makes its way into your rules. Because if not, you're just confusing yourself, right? Isn't it horrible to take trades when you're not sure whether or not you should be in that trade? Doesn't that take away an advantage? The only time you should ever use that market flow chart initially, guys, is when the rules are true. It's a confirmation chart. It's not a make you brilliant, get you into a trade chart. That's why I only teach with 2 charts, because I have everything that I need on 2 charts to be successful. I have everything that I need. It's up to you to make the decision whether or not you want to add more information. But I encourage you guys, if you add more information, make sure you know how to use it. Tony, bad top, right? Guys, this is a page out of Ron's book. Odds favorable momentum and everything says down, and Tony gets in short, gets out. Makes a little money. Everything says up, odds favorable momentum. He gets in with that crazy strong momentum, gets out when he hits trouble. Ron C type trade. Tony, send Ron a nickel. It works, guys, but if you're not reading your indicators, if you're hoping, you notice how everything says up, the momentum says up, the path is clear. This isn't a pullback to an area inside of favorable large triggers. Guys, that's a quick little let me get paid fast and get the hell out of the market before somebody with bigger pockets than me changes their mind. Tony, beautiful execution. And Cam, you're absolutely right. Your confidence gets destroyed when you start taking possible versus probable. How many bad trades does it take to make you feel like you're not any good at this? Some of you, it takes 1. Some of you, Ron, do you know how many trades it should take for you to decide that your plan stinks? Whoops, 20. If you take 20 trades and you're not winning 50, 60, 70%, guys, there may be a problem with your plan, right? If you take 100 trades How many trades can I expect to lose if I take 100? 30, right? 20 to 30? Cam, you don't get to pick which of those. If you take 10 trades, the likelihood is that you're only going to win 7 of them. Don't gauge your worth as a trader on one trade, guys. That's like saying you're only as good as your last XYZ. Bullshit. Pardon my French. It has to be a sample. It has to be something that's repeatable, and it has to be something that you have decided either works more than it loses, or it wins more than it loses, right? Geo, you said your charts are different. You're connected to simulator. Different than what? Different than mine? Because you're on crude 723. Geo, are you in here? Crude rolled. Crude oil rolled this morning. NinjaTrader 8 gave a little how-to. And let me show you. If I make a market analyzer, crude rolls on the 15th of every month. I put a big note in the beginning of the room, and I'm sorry, I probably should have mentioned it a couple more times. So check it out, guys. Every time an instrument rolls, you can do a market analyzer. You can go through and you can compare the 7 contract to the 8 contract. So the volume on 8 is more than twice what it is on 7. So Geo, you're just looking at a different chart really at that point. You're looking at a different contract than I was trading. That's why it looks different. I'm sorry it took me so long to get back to that one. So if you need to roll it on NinjaTrader 7, guys, you need to go to your instrument manager, type in CL, and when you highlight it, you're going to put it over in the list. And then once it's over in that list, you're going to come to your drop down and you're going to select that one. And that's going to roll your contract and get you to the one with the most volume. Sorry it took me so long to get to that look. Guys, check it out. Price reaches support. Absolutely no trigger lines break through. It's coming from a bad top. Thank goodness we didn't go short, right? And look at this. Bad top comes to the mid-band, continues up. Bad top comes to the mid-band, continuing up. Continuation. We're in an uptrend, aren't we? Well, we're in a downtrend, but no rules met. You're going to post a few of the July MCL? Awesome. Cam, you were looking at the wrong charts too? There's always somebody. NinjaTrader 8 will prompt you. Gary, absolutely. Perfect termination with absolutely no momentum. Sit on your hands. Why not? And guys, that's it. We got all the pictures taken care of. So let's talk about what we see on charts. Termination condition, right? Look at these large triggers, and this is why I stretched it out. They're flat. They're lifeless. Guys, there is no momentum with flat triggers. None. Strong triggers. Let's find strong triggers. That's strong triggers. That's lifeless and flat. There is no momentum. Guys, you're in a downtrend. Your triggers are green. They don't match up. No reason to look for a trade. Price reaches resistance. The trigger lines are below. No reason to look for a long. Price reach support. No trigger lines below. No reason to look for a short. Who took this short? Lost it, wondering what the hell happened. Guys, rules are designed to keep you safe. If every time you walk into the market and you say, do I have odds favorable? Yes. Do I have no termination conditions? I had a 50-50. I had an area with the potential to break but wasn't broken. I have forfeited the advantage of a clear path. Guys, I had an area inside of favorable large triggers. That's a 50-50 entry. That's a checklist-based 50-50 entry. That's still a loser. You will take losers. But if I take this picture, guys, go back and study it. Are you learning it? And this is one of the reasons why I don't trade NASDAQ. I don't show it a lot live in the room because the NASDAQ is a pain in the butt. That's a picture-perfect termination condition, right? Creates a full reversal. That full reversal ultimately gives me odds favorable momentum. that odds favorable momentum, let's use a checklist. Great top, awesome triggers. Termination conditions, nope, I have an area that hasn't broken. So I know it's not a high probability trend checklist. So I'm going to put my medium probability, my 50-50 trade on it. What happened there? There we go. I'll just get rid of this one. Did I have odds favorable? Absolutely. Smalls outside of the large without question. No divergence seems to be true. Is it from a good top or bottom? Absolutely it is. Guys, this is a medium probability trade. Your initial stop keeps you safe, right? So if you're in at 68, your stop is at 72.75 after that reversal bar, and you probably take a small loser on a medium probability trade. That's it. Couple ticks, right? No reason to sit and hope. You have all the information you need to manage that trade. Medium probability has to be managed assertively. Guys, start taking these pictures. Get them into your spreadsheet over and over. When a 50-50 trade doesn't work and you get a full reversal, we're looking the other direction, right? We're looking to go without odds favorable. We're looking to embrace those no terminations. We're looking for advantages, guys. Look how the S&P is kind of binging and banging in between fibs, right? I can't go long into resistance. I can't go short into support. Next gen users, you have rules designed to keep you safe and keep you from getting beat up when it's choppy. It's kind of a blessing. Cam, let's see what you got. Cam's got a little different look here. So Cam, you have odds favorable coming into that potential termination condition, right? And I like this. You identified it. And you said, but with this momentum and the perfect entry, you're willing to take a shot, right? You had a termination condition, but you made a choice based on all of the other advantages. You get in at the area inside of favorable arch triggers. Your stop keeps you safe. You rely on momentum to take you up to those next levels. I think it's a great trade, Cam. I think that you've got so many advantages that you made an intelligent decision. You gave away the advantage of a clear path, right? But you had overwhelming momentum. You had no slowdown. You had a tiny window of opportunity. And guys, if you're going to use an 8-range chart, you had odds favorable momentum on an 8-range chart as well. Cam, I think this is beautiful execution. I think it's taken advantage of the advantages. It's recognizing, identifying, and being aware of the potential problems. Making good choices on exits, right? You came back and retested that potential problem. Why not get paid? No reason to sit and hope. Beautiful trade. How often is it going to work into a termination condition? And guys, this is how plans are built. It didn't work there, right? Let's see where else. Didn't work there, didn't work there, didn't work there. And if you scroll back and you look, it didn't work there. So guys, just trading into termination conditions is probably problematic, right? As a blanket rule. But as you learn to read your charts and you learn to move forward, what you're going to do is you're going to say, well, yeah, I don't have a clear path, but with this much momentum, it's likely to go back and retest the area. Without divergence on my smaller chart, it's likely to try to push down one more time. I'll manage it assertively. Does that make sense to everybody? I'm not beating Cam up for trading into termination conditions. I'm praising Cam for recognizing all of the conditions that were advantageous, for identifying them, for pointing them out, and talking about everything that he did as he took this trade. Cam, if you go back and study this picture, does it give you everything that you need to replicate this trade? That's what we want. Go back and look at it. But how many times into a termination condition does it take your money? So you're gauging those other advantages and making sure that they're not forfeited. Guys, we made it through the second hour. Before I take a little break, before I go Mike's silence, I know you guys love it when I call you out by name. K-Pops, how we doing? Sitting in Dallas, dreaming of a Super Bowl. How we doing? How do you feel about the rules, the advantages? Are you comfortable? Awesome. Iceman, feeling all right? Philly Trader, how we doing? Guys, remember that this is your class. This is your first day, so there's a lot to take in on the first day, right, K-Pops? I'm going to talk about the same stuff every day. So tomorrow you're going to be a little more comfortable. Iceman getting a little better every day, right? Guys, this is how it works. I always tell people, let yourself be a student. Let yourself be brand new. It sucks to be the new kid in class, right? Especially when you're coming from the old school and the new school's 2 weeks ahead. You feel lost. It's okay. My job's to get you caught up. My job's to get you right where you're supposed to be. You're old school. You're not that old. Not in this crowd. You got to be damn near 90 in this crowd to be considered old school. You started trading in 93? Right on. Well, welcome to NextGen. You have the burden of having to take what you know and work it into what you see now, right? Man, Folger, I got your positive reinforcement. You haven't traded in 20? It's a lot easier now. I watched my brother 20 years ago do it and his clients do it, and I'll tell you what, it's a lot easier. And anybody that's been with NextGen more than 5 years will tell you that it's even easier today than it was 5 years ago. Been running a business. Good job. Well, we got your new business now. Good stuff. Guys, I'm going to take a minute. I'm going to go stretch my legs, hug my wife. I'll be back. And when I come back, I want you guys to run the class if you don't mind. I want you guys to tell me what to talk about. I want you guys to discuss advantages. I want you guys to show me disadvantages. I want you guys to set the tone and let me know what we're going to do for the last hour. I'll be back, and we will continue. All right, y'all. Oops. Here we go. Here we go. Last hour. It's 11:11. Make a wish. Dun, dun, dun. Guys, this is the S&P. What do we see? One of those pesky pivot stop outs, right? All the way back to support, all the way back to a divergent high, all the way back to the mid band, all the way back up to the divergent high. There's really nothing to do in here, right? Finman, show me a picture. Oh my gosh, don't give me a chore. Show me a picture. Show me those two charts. Write some rules on it. Let's see if it was. While you're taking that picture and annotating it? Oh, Discord's on a different computer? All right, you get a pass then. You get a pass. Let's take a look. 1039. What is that? So let's go through this, Finman. I'm not even going to take a picture of the 5-1. I don't even need it. Are we coming from a good top? Finman, you get to answer the questions. Give me Y's or N's in the room. Good top? What do you think? Termination condition creates a full reversal, gives us odds favorable momentum. Guys, what do you think? Are we coming from a strong top? Let's put the checklist on it. Anybody have an opinion on that? Anybody have a chart read on it? Anybody say, hey, can you guys hear me? Thank you. So I agree, 100%. That's a yes. Did we have odds favorable momentum? Were the smalls below the large? Were the large wide? Were they angled in the direction of the trend? What do you think, guys? Can I mark yes? Absolutely. So this is where you got caught up. Are you ready? What about termination conditions? Trend termination conditions not true. Are you ready, Finman? Price reached a divergence low. None of my trigger lines broke through it. Isn't that a textbook termination condition? Which means that I have to mark no right here. But that's okay. So do you know what happens sometimes? And I think this may be what happened. Is guys right here, you're going, oh, I just need the large triggers through, just need the large triggers through. Here they come, here they come, here they come. Man, I have a clear path. And you're thinking, yes, gosh, we got to the other side of that fib. But then those jerk faces put a divergence low right there. So you had that termination condition. And then we don't want them inside. We want them outside. For the short trade, we're looking for that space in between the two. We actually want them apart. Because when we go back to that odds favorable momentum, bum, 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 bum. I wish you guys could see how much clicking I do on the sidelines to bring you these pictures. That's our best look. Smalls outside, everything angled. That's that giddy up look. So Finman, at 10:39, did we have a high probability trend trade that didn't work? Or did we have rule number 2 saving our bacon once again? Guys, I love going back, finding the ones that don't work because the rules aren't met. It just reinforces that trust. You lost it, David? David, are we cool enough for me to make a little joke? Did you get stopped out somewhere up here? Show me the trade. So, David, why wouldn't you show me that trade? Why wouldn't you take that picture? Why wouldn't you annotate that chart? Why wouldn't you put it in the room and get some feedback? It is, isn't it? You want to know a true story, David? And I won't ever pick on somebody for being embarrassed. I'm going to tell you a very, very true story. When I started learning the software, David, and you guys know my brother's the CEO, right? My brother developed the software. My brother writes the algorithms. My brother created the educational path. My brother told me to do 3 things. He said, Mark, write down rules. and I didn't write down rules. He said, take pictures. And this is how easy he made it. He said, take pictures of 5 perfect entries. And do you know what I didn't do? I didn't take any pictures. And he said, post in class. And this is exactly what John Novak told me to do when I was learning the software. John Novak said, take pictures, write down your rules, and post in class. He goes, Mark, I'll give you everything that you need to be successful. All you have to do is these 3 things. Guys, I didn't do it. I didn't write down rules because my last name was Novak, and I felt like I was pretty darn smart. Why would I need to write down rules? I've got them in my head. I didn't take pictures of perfect entries because honestly, it felt like a lot of work to do this. How lazy was I? And I was too. In my defense, I just had spine surgery, may have been on painkillers. And then he said post in class. And David, I was just like you. I was embarrassed. I didn't want to post in class. If I took a loser, I didn't want anyone to know that the guy whose last name was Novak was new. I didn't want anyone to know that the guy whose name was Novak wasn't an expert on day one, right? I didn't want anyone to know that I didn't take the time to study odds favorable momentum, that I didn't take the time to study a clear path, and I certainly didn't take the time to learn about where an entry inside of favorable large triggers was. Do you guys see what I just did there? All you have to do is focus on that entry. All you have to do is focus on that absolute best of the best. Guys, it just happened live right in front of you. And then from 45.75, I only have to get to 47.75 to make $100 to go to break even. Do you see how quickly, how effortlessly I'm having a conversation about one thing, but because I've done the study, guys, there's your $100 profit, your break even now. Momentum and direction says we might make it to that next fib. Guys, give me a Y in the room if you see what I just did there. Hopefully you're too busy taking this trade because it had all the advantages, right? David, it is embarrassing, but man, this is about the safest spot you could ever be in. I won't ever beat you up. I won't ever beat you up. How did you not get filled, Debbie W? Did you try to be smarter than the market and drop it down by the mid band? Oh, just too slow? That's okay. You get faster with repetition. But guys, this is all we do every day, right? And that one, that's $100 in break even. Stretching is good. That's $100 in break even. But then you have to ask yourself, are the rules still met? This is how management comes in. Are the rules still met for a high probability trend trade? Do I still have odds favorable momentum? Do I still have no termination conditions? Do I still have an area of entry inside of favorable large triggers? And if it is, maybe your management plan changes, or maybe you get stopped out for 100 and you go through that process all over again. But isn't that pretty cool? All you have to do is say either the rules are met or the rules aren't met, right? Either the rules are met or they're not met. That was 45.75 again. Where's my next $100? 47.75? If it makes it, that's $200, right? I can use this reversal bar for my stop. I can keep it below that reversal bar. I've got 4 or 5 ticks of risk on this trade. Guys, your goal is to get so good at recognizing this that this has to be done. You just hit your $100 again, guys. And now you're break even once again. You were embarrassed as well, Cam. Kept your losers from me. Slowed your progress. Guys, I was very embarrassed when I broke the rules. You guys see how the tail? There is no tail, right? This is why we don't trade tails. There is no tail. So Gary, you have to ask yourself, why didn't you re-enter? The rules were met, right? End of odds favorable momentum, 50-50 look, coming from a good bottom. You take the quick entry, second divergence prints, rules changed. Make a tick. Alan, that's great. Beautiful trade. Pragmatic. Bobby, 50-50 trade, end of momentum, divergence prints. You said hell no. And it's not coming from a good top. Bobby, great job following your rules. Your rules say you can't take that trade. Way to follow your rules. Odds favorable, clear path, perfect entry, quick profits, no loss. The rules were met for the second entry, weren't they? And guys, there it goes. If you're in at 45.75, you're already break even and you only have to get to where? 45.75? 49.75 is your $200. David, you're long 45.75? Did you already take first profits? Are you already break even? Great job, David. That's oh crap, there's your second target. Now you're out, right? You just hit 49. Then you took a counter trade with your old setup and it cost you $600. Ouch. Wouldn't it be awesome if you only traded with the trend? Wouldn't it be awesome if you only traded with momentum? It's awesome for a lot of you guys right now, isn't it? Because some of you got paid on both contracts. Some of you said with this much momentum in this direction, wild horses couldn't pull me from trying to make that next fib. And some of you are waiting for 51. Some of you have already taken profits. You may say, well, if I get a second divergence right here, maybe I'll exit, or maybe if it pulls back, I'll re-enter. But the key is that you're getting in at the absolute best of the best spot, guys. And keep your head in the game. If the rules are met, take the trade. That's the hard part. I used to road race motorcycles. I love to tell this story. Back when I was a lad, I road raced motorcycles. And when I road raced motorcycles, there were two divisions. There was the novice division, which I was at the time, first year. And there was the expert division, the guys that had been doing it for a while. Guys, there were novices that were turning faster lap times than experts. But the difference is when a novice made a mistake, it ruined 3 to 4 laps. There was this recovery time before they got back in the game. The experts recover almost instantly. Debbie, beautiful entry, quick profits. Why on the other side of the fib, Debbie? Why not, and this is totally up to you, why not be willing to give up 3 ticks and take an exit at a fib rather than hoping that that fib breaks? As you work on management, you paid good money for these fibs, right? I can't tell you how much money I've given back on bounces off of fibs when I should have just taken profits at the fib. And this one's probably going to rail right through it just to prove me wrong, right? But guys, if you're still in this trade, nothing has changed. Absolutely nothing has changed since your time of entry. The only thing that has changed is that now your small triggers are in the same direction of the trade as well. Gary, you'll probably get a better answer in Traders Chat for that one. A lot of new people in here. I'm not sure who's using what. I've never heard of Flowbots. I like the way it sounds, though. Guys, the market is showing you a high probability trend trade. The market is showing you a $300 winner plus. The market is showing you odds favorable momentum. Your indicators are telling you where the market is likely to go, where the market is likely to continue, right? And you have an idea of where the market is likely to stop. And right now, Debbie's going, ha, Mark, target reached. Darn you, Debbie, for being so good at this. But isn't that amazing? If you were in at 44.75 and you took your exit, even at 50.75, guys, that's 6 points in a high probability trend trade. What is 6 points? That's $300 on one contract, right? If you took 100 on the first and 6 on the second, that's a $400 trade. Guys, that's darn near gold met for the day. Your job, I say that a lot because I want you to think of this as a job. Your job is to develop the trust in this look, guys. How do we study it? If you didn't take this trade, circle the tail. Look where it showed up. So, and then I want to address what you said. You said $600 loss with your evaluation. I don't know what AC means. You're frustrated because the NASDAQ had a 200-point move that you missed during class, right? So then, did it have a 200-point move with a statistically advantageous entry that you missed? Or did it just move 200 and you decided that that was your money? One of the biggest things, guys, that I can't do as a trader is if this market moves from here to here and my rules aren't met, it's not my money, right? If my advantages aren't present, it's not my money. If it moves from this fib to this fib and it doesn't give me an opportunity, it's not my money. And I have to be okay with that. Because what happens is when it is my money, when my rules are met, bingo. I'm getting paid more often than I'm not, right? That's it, Iceman. Not everything is yours. John Novak used to always say, and it cracked me up. John used to say, walk into the bank and go demand all the money. They're going to tase you and hog tie you, right? But if you walk into that same bank and you walk up to the teller and you say, hey, may I have my money, please? They're going to pull it from your account. They're going to give it to you because it's yours. Yeah, you do, Vin, right? Do you need a home run? Man, so that's good. You've already identified one of your challenges, right? One of your challenges is you think everything belongs to you. That's okay. I share that one. Look at this. This is NASDAQ as well, Vin. Odds favorable, coming from a good top, 50-50, no divergence, strong triggers, tiny window of opportunity. There's another winner. Vin, you don't have to hit the home runs. There's 2 winners on the NASDAQ over the course of 8 minutes. All you have to do is learn to look, right? Let's see what other opportunities NASDAQ held today. That was one, I believe, at 1041. And guys, oh my gosh, it's beautiful. If all you were looking for was $300 winners, guys, we've just pointed out $900 worth of potential profits in the last 50 minutes. Cam, how much money, or Vin, I'm sorry, how much money on the NASDAQ is a 200-point move? $800? Is that right? So 3 high probability trend trades, less exposure, lower risk, more advantages. And this isn't the last hour, Vin. This is how you get over not catching everything. Catch the best. Does that make sense? Because you were sad about missing $800. I just showed you 900 plus, really. I don't know what all of these winners were. And if I go back, oh my gosh, there's another one that goes right to the fib. Nice, David. So, David, imagine if you didn't take that trade into a termination condition. Where would you be without that loss? You'd be up, what, about 500 right now? Not from taking more trades, just from eliminating that one. Gio, you put ouch. Let's see why. Man, Gio, you kill me with these charts. Can you show me everything? Rolled up, away strong, in on a pullback. Why is that ouch? That's in at 12. It traded all the way up to 27. That's 17 ticks. You should have already been paid at least once, right? I'm not sure where the ouch comes from. Nice. Who was this? Alan? Are you kidding me? Odds favorable, no termination, beautiful entry. What changed, Alan? What changed in that trade? And this is the only lesson. It's a beautiful entry, isn't it? Man, it is textbook. Guys, every beautiful trade has a management opportunity. Ask yourself, when you get into a trade, I'm in, I have odds favorable momentum, no termination conditions, and an area inside of favorable large triggers, right? This is your requirement for getting into a trade, right? So if you're in that trade, guys, this is the next step of management. If your first target's reached and everything still says that this is the right trade, it becomes okay to keep that stop where the market shouldn't go, right? Or it becomes okay to get back into that position if you took it out, maybe add on another contract, because it's all still rules met. Alan, beautiful entry. You put your stop just above an area of support inside of favorable large triggers when the 13.2 said it was time to look for an entry. Does it make a little more sense if I say it like that? Your stop is an entry, isn't it? You have to put stops where the market shouldn't go. If this were a 50-50 trade, I like it. But man, this is the mother load. This is odds favorable, no terminations from a good bottom, tiny window of opportunity, angels singing. Guys, children sing songs about this look. 470 for the day. Nice work, Gio. But once, well, did anything change for a 50-50? No. You guys want to know a story? You know I love stories, right? Is when I first started trading, guys, I got really good at entries. I really did. I studied, I took my pictures after I did the whole blowout thing. And I got really good at these entries. I could nail an entry. But here's the true story. I was scared to death to lose. I was absolutely terrified to lose money. And I might take 20 perfect entries in a day and be up 5 ticks because I'd managed myself out of them. Vanguard, you don't need me to trade live in class, right? What you need is to go back and circle the tails. To burn this image in your brain until you never miss it. Watch how easy it becomes. Odds favorable, haven't reached resistance, so I have a clear path. I have a mid-band inside of favorable large triggers. Boom, that's how quickly that analysis can happen if you go back and study. What happens if it reaches resistance? Termination condition. Get rid of that order. I lost my clear path. Isn't that cool how quickly that happens? There was your winner. Straight up to Fibonacci resistance. All you have to do is practice this look so often that you never miss it. 50-50 trade, multiple divergences. Guys, that's ugly. If you took the first one, you probably managed out break even. No reason to take the second one because the rules aren't met. So then I'll do this whenever I can, right? We'll talk about the live looks. We'll do this stuff. But you're not going to get it from me showing 2 trades a day. You have to scroll back. You have to do the study. You have to fill this spreadsheet. It's the only way to get to where you want to be. You can watch videos all day long of Tiger Woods crushing the ball off of the tee. It's not going to make you better with a driver. Let's go back into that path, guys. To minimize your learning curve, post pictures in class. Have I mentioned that? Every trade, win, lose, or draw, right? Because there are lessons from the losers, guys. There's great lessons from the losers. Hopefully, we can keep you from taking those losers next time. If you win and the rules are wrong, you may have a short-term victory, but you're practicing long-term failure, guys. How will you know the difference? To be sure, you need feedback. That's my job. The only reason that I have a job is because I can read these indicators really well. And because I can look at your charts and tell you exactly what's going on, what provided an advantage, what gave a disadvantage, and I can coach you right into a position where you can embrace advantages and become consistent with this software. That's why John Novak hired me, not because I'm his brother, because I am passionate about teaching. If you place the trade on the simulator, if you participate in class, guys, you can't lose money. All you can do is get smarter. You need someone to tell you what you did right or wrong, and that really is the educational magic, guys. Embrace that outline for education. Post pictures, use a spreadsheet, learn your rules, make it easy. Everything that I say all day. Use a checklist. Guys, don't be too smart. I used to trade managers from all over the United States for the company that I worked for before I became a trader, before I started working for NextGen. And every person was given a checklist. Here's how you achieve success on every shift that you work. Follow this checklist, you'll never have a problem. And for 30 days, these guys were savants. They were amazing. They never made mistakes. And right around 25 to 30 days, they all decide that they're smarter than the process. And every one of them started making mistakes. Guys, it happens. It's the 30-day stupid. We all get too big for our britches. We get a little bit cocky. And we start making those mistakes and we abandon everything that brought us success. It's normal. It's human nature. My job is to reel you back in when you jump on that path. Annotate your charts. Guys, I say this until I'm blue in the face. If you're not talking about why you did what you did, how on earth are you going to repeat it if it brings you success? How on earth are you going to avoid it if it's removing that success from the equation? Annotate the hell out of your charts. Define your management plan, guys. A mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach. Initial stops, guys, that same thing that we talked about. It's in the spreadsheet, all the pictures. Give yourself 30 to 90 days to practice mechanical entries, mechanical exits, guys. You can adjust your targets based on experience later. That's how you get to where you want to be. You can't sidestep anything. Cam, not sure if I covered this one. I did. It's a 50-50 trade, divergence prints. You take a perfect entry below the areas, right? Nope, we didn't talk about this one. I apologize. So let's look at it. What do we have? Weakening of the triggers, right? Smalls are returning to the large, and we're 50-50 on a divergence high. Do you see it? Starting to lose momentum is great, but how about 50-50 on a divergence high with a loss of momentum? Doesn't that give you more information? And now we have a second loss of momentum, right? So I have a divergence high without the large triggers through, losing momentum, with a divergence letting me know that I'm losing momentum on the smaller chart as well. That's okay. I'll get in at the area inside of favorable large triggers. Down here, you take it, you get in a little bit late. Your risk is defined. Your first trouble spot becomes this divergence high. I like that you got your first target. That's awesome. At that point, you're break even because you're not willing to lose. It hits that perfect spot. It's a 50-50. You're not willing to lose. Cam, beautiful management on a 50-50 trade. Great entries create more wealth, without a doubt. If you're in down here at 19, your break even's a little bit lower, and when you get this, and guys, I say this, if you're going to use a chart, right? You already had one reversal bar coming from a potential termination condition. This is kind of a key look. This is your, oh man. And then when it double tops there, your exit's beautiful. Cam, I think it's great. Nice job. When you go back to look at tails, you don't have to analyze each pivot, since those pivots could have also turned into tails but didn't. Absolutely, Finn, man. So check this out. Right now, all we're working on is entries, right? Good job. Tell your son to get a Discord account and start asking those questions, Cam. And you keep teaching them because you're really good at reading these. So, Finn, man, let's look at one of those instances, right? And I'll show you why we look for tails initially. Nice. Let me know if I can help. So the top of this bar, Finn man, had it continued down, it would have been a tail. Are you comfortable with that? So you'll see those 50-50s. Like this 50-50. We can circle the tops of the bars on the 50-50. That's 853. Let's go see what it looked like. I've got a few circles in here. There it is. At 850, this is a 50-50. It's coming from a bad top, right? 50-50. I don't have divergence, but my small triggers really aren't outside of the large. I do have... Do you see how the triggers are split? I like this look. My large triggers are below, my synthetics are above, and look at my areas. They're caught in limbo. Like they're in purgatory. Neither of them are inside of favorable large triggers. Even if I circle this one, I can say, well, this wasn't a good look. I'm not going to take that trade, right? And then we come through and we're going, and there's another one of those 50-50s directly into a mid band. At about 10:15, I'll circle the top of it and let's see what it looked like. No divergence. From 44 to 49, it's about a 5-tick entry right here. But it's a bad top, right? And it's a bad top directly into a mid-band. So this is where you might say, hey, Mark, can I take this trade? And I would say, Finn, man, I feel like you could, but because it's not coming from a strong top, let's talk about one of the patterns that we recognize so often. And that pattern is when the market isn't coming from a termination condition, that mid-band becomes the first target. And when that first target is hit, very often it continues up to that next key area. Not a termination condition, right back to the mid-band, and the market continues up. 50-50, not a good top, right back to the mid-band, and that continues up. So we'll talk about patterns that maybe have you respecting this mid-band a little bit because it's not from a good top. Does that make sense? Guys, everything that I talk about and everything that I teach repeats itself every day, every market, and you're just building this database. So let's use that same lesson. Not a good top, it's just a pivot with a loss of momentum, right? I don't have odds favorable momentum, and there's absolutely no reason to go long at a mid-band because I don't have momentum, right? I don't have momentum. I have divergence. It's ugly. Guys, your rules say don't do it. And if I come all the way down to this mid-band and support, even with odds favorable momentum, because it's a bad top, I have to believe in my heart that this could create a bounce that could kind of kill my chances. Does that make sense? So we start basic, right? We start with patterns. We start with trading with the trend. We're going to start with trading with momentum. We're going to start with making sure that we have a clear path. We're always going to take entries inside of favorable large triggers because that's where the magic happens, right? Now here we have a good top. And we have odds favorable, and it's a 50-50. And my window of opportunity extends from 1450 to 1788. And guys, if I get a pullback and divergence doesn't print, that's a pretty good looking medium probability trade. And look how everything comes together, how that consolidation comes together. From the top of my triggers to the bottom of my triggers, from my highest point of resistance to my lowest point of resistance. And by the time I could do that, guys, we reached a termination condition. Then that's not your money, right? Because it didn't give you an entry. But that could have been your money, and that was 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 your money. So what happens is when you start catching the easy ones, guys, you don't worry about the ones that you don't catch. Pretty cool, right? If you just wait for the easy ones, you don't give a crap that that went without you. Who cares? It's not your money. This is a manic sell-off by some dude with deep pockets. We don't care about him. We're thankful that they went the other direction and gave us a pullback earlier. And that's that trust piece, guys. Once you develop that trust, life gets easier. All right, David, let's see what happened. It is, right? Guys, hindsight's beautiful. So 50-50 trade. Here's your first entry into the termination, right? That's a lot of risk. That's okay. David, we're going to get you out of this habit, right? You're going to become so good at chart reading that you're going to say, you know what? If that market doesn't go down from that area inside of favorable large triggers, I'm out of it in 5 ticks. I'm not going to risk that much. It's not worth it because when I take the right trades, everything's going to work out. Here's a 50-50 up here, right where you got stopped out. That might have been a 50-50 trade that you entered. But they had other plans. It's a pivot stop out. It's 50-50. And look at this, guys. It's not just 50-50. It's a divergence high that hasn't broken. And it's a Fibonacci area that hasn't broken, right? That's 2 areas. And those areas have a huge gap in between them. That's not the best look. David, you're right where you need to be. And I can't stress this enough because your entries are absolute rock star. So you write down on a piece of paper, I need to learn to manage. And until I have everything I need to learn how to manage, David, man, use this. Just use this. Keep it simple. You're on simulator, man. You don't have to hit home runs. Keep it easy. Keep it effortless. Don't overthink it. Because every great entry that you take has a management lesson. When is it time to hold for bigger moves? When your 13-2 triggers say, hey, giddy up, let's go for bigger moves, right? Every great entry has a management lesson, when to hold. It makes sense to hold when the 13-2 is screaming and nothing's in the way, right? Why jump out when everything still says down? That's when it's appropriate to do it, because all of the conditions are met, and they're met really well. Divergence says get out. I'm taking a 50-50. I got in without any divergence. I took quick profits, and now I've got divergence on a 50-50, 3 divergences in the same location. Get the hell out of that trade. David, you're right where you need to be. You're eating an elephant right now, right? And you're eating it one bite at a time. Because if you try to do it all at once, you're overwhelmed. If you try to get entries before you understand advantages, you're overwhelmed, guys. Simplicity. You're welcome. You know, Joel, I spent years of my life being negative and troubled. And man, I'm the most sunshine and rainbows guy you'll ever meet these days. I've done it the hard way. It's all right. It is what it is, right? Everything that happens makes you better. Every loser makes you a better trader. Every broken rule makes you appreciate the rules. So check it out. Bad top, right? Not a termination condition that creates a full reversal. Holy smokes, look at that bounce on the midband. And those large triggers are all the way up here by that reversal bar marker. Gap theory. Let's see if it closes the gap. Patterns repeat themselves. Guys, my promise to you is that I'm going to be here every day. I'm going to talk you through the rules. I'm going to talk you through the advantages. I'm going to take your pictures, and I'm going to do my absolute best to painlessly help you realize what you did, what you're doing, why you did it, how it creates advantages. If there was a loser's competition, you'd come in second. That's kind of funny. I like it. You're that much of a loser. That's all right. Dads do that. That's funny. Guys, that's not the Ricky Bobby theory. If you're not first, you're not last. You're just on a path, right? Take those advantages. Just keep it simple. Keep it simple. Keep it focused. Learn how to enter the trade, guys. That's all you're doing right now is you're learning how to enter the trade. And then, David, let me give you this one again so that you can look at the pictures and start burning that into memory. And guys, everybody steal this. Initial stop, and I've got pictures of it all the way along the way. Take a look at it. And then if you're going to do that 50-50, guys, it's okay to commit to that easiest, highest probability, right? You got this. Everybody has this. And then one more thing. Let me give you my spreadsheet. For those of you that are working on your own, guys, steal my pictures. Study them. Iceman, Philly, all you guys, go through tonight and just start clicking on those links. Vin, click on those links. Look at the best of the best looks. Put yourself in the best position for success. On that note, I'm going to call it a day. I've enjoyed being with you guys. It's been a great day. I think we've gone through a lot of information. I think you guys have really taken a grasp. There's your gap theory. It all starts with simplicity, guys. You've got the rest of your life to make stuff complicated. Let's keep it easy for now. I'll see you guys in the morning. I'll be back at 9 a.m. And then we're going to do it again. If you do market replay tonight, take some pictures. Give them to me, right? Let me know. Can't wait to see it. I'll see you guys in the morning. Everybody take care. Be good. Enjoy your afternoons.